Today we're going to detail short hedge funds going out of business, FOMC meeting over the last 2 days, interest rate hikes, Evergrande delisting today, mortgage-backed securities, in the toilet, credit default swaps through the roof, and my favorite hedge, meme stocks, precious metals, and tangibles. Let's take a quick peek and see what Biden's been up to lately. Hi everybody, it's great to see you. Hi Johnny, Danny, Twizzle. Welcome everybody. Hello Jam Bams, Pantheon, everybody. Welcome to the think tank. Bloomberg just showed another hedge fund closing and returning money to investors. Indeed, my friend. That makes multiple hedge funds in the last 24 hours. So who wants to see what this clown's got to say? Listen to this. This is hilarious. It's a great way to start off the day and the video.
People's lives. I don't want to hear any more of these lies about reckless spending. We're changing people's lives.
Mm-hmm. Yeah, you have, Mr. President, for the worst. Joining me now to help Biden get out of the soup is Liz Peek, syndicated columnist and Fox News contributor, and Matt Schlapp, CPAC chairman and author of The Desecrators. Welcome, Matt Schlapp on set. Liz, as always. So, Matt, in honor of your being on set, what's he talking about? He's yelling, there's no spending, he's changing people's lives. Do you think people today, serious question, do you think folks today think their lives are better after a year and a half of Mr. Biden?
So, you know, Larry, I'm a political guy. I'll let you do the economics. You and Liz can do that. All I'm going to tell you is I'm looking at these polls. We can say independents, he's lost them clearly, but even Democrats, look, everyone's filling up that car with gas or that truck with diesel. Everyone's trying to scrounge around to find baby formula. Everyone's spending too many dollars for a half a gallon of milk. This is hitting everybody. It's really hitting Democrats. And I think what's very interesting is what's going on with blacks and Hispanics who are feeling the pinch mightily. By the way, they don't like all this messing around with gender and their boys and everything else. There's a lot at play here. But Joe Biden has lost the moment that he had. Remember, he could reset it. He was going to come in and bring things back to normal, and instead, he broke it all. And it's like the Colin Powell thing. It's his. He's got to fix it, and he can't.
You know, Liz, it's an interesting thought. Going back, you're watching his presidency shrink to nothing, in a sense, dissolve. Wow. His own party doesn't want to nominate him, according to all these news reports. Did it start in Afghanistan? Was that sort of the beginning of the end? I wasn't going to raise this, but because of what Matt said, was it Afghanistan, the catastrophe there, that started his decline?
Yes. If you look at the polling on his honesty, for example, when he took office, he was above board on honesty. More people thought he was honest than dishonest by like 10 or 11 points. Quite a lot, quite a big gap. Now he went underwater. He's now underwater by about 7 points, and the lines cross literally the day that the embassy in Kabul fell, or that we evacuated our embassy, I should say. But I think also at that time, don't forget how early inflation began to show up. It was like in May, June, July, August last summer. A lot of us were writing about, whoa, what's happening here? This $2 trillion American Rescue Plan that he is defensive about now indeed tipped the balance, and we had too much money floating around in the economy and too few goods, and indeed prices started to go up. So I think it was both of those things pretty much simultaneously. But in Afghanistan, he lied to the American people about something we care desperately about, which is our military. Indeed. He should never have done that. His own people contradicted him. Milley and Lloyd Austin. That's pretty shocking.
No, it's a great point. It's an important point. Matt, also, I think Biden lost out very badly on the parental rights in the schools.
Yeah,
Okay,
for
he
sure.
and Merrick Garland and his people
That's right.
basically defended the school boards and the teachers union. It's funny, not
Worse
only
than
on the
that. Worse
specific
than that.
issues, but just on the being.
Yes,
Now,
right.
The idea that they're domestic terrorists, really? They're parents.
You're right. That's the key that I think when he allowed his administration was pitched this idea, we need you to call them domestic terrorists, right? And, you know, the AG, our Attorney General, supposed to be outside of politics. He played politics as bad as I've ever seen it. It was odious. Called parents domestic terrorists. That whole revolution, that revolt, really, that happened in the Commonwealth of Virginia spoke to the woke. So I agree with Liz on the bungling on, three legs of the stool, bungling on Afghanistan, inflation, bad economic policies. But this culture piece, this idea that you can't love America, warts and all, with all of our mistakes and all of our history, but you can't love America, wear a red tie on Flag Day, that you can't be a booster of cops or the military, that somehow shows that you're anti-intellectual or not in the modern moment. Where did Joe Biden get to the point where he's with the Gene Kirkpatrick, they always blame America first crowd? That's not going to sell in the long run, I hope, if we're to have a future.
And Liz,
I don't want to hear any more of these lies about reckless spending. We're changing people's lives.
yeah, you have, Mr. President, for the worst.
Well, everybody, welcome. We've got some leaked information here, it looks like, that should not be out yet. This is not supposed to be out for another 6 minutes. This is proposed FOMC red line. It appears that this is what the changes to the FOMC meeting today are supposed to be. Now, I'll read this aloud to you since it's pretty small. This is supposed to be released in about 5 minutes, but somehow we got it early here, thanks to BBG. The red words are the changes that have been made. Let me share my screen in the Discord. Actually, before I do, let me just read this out loud so that it doesn't make a bunch of noise in the background. The economy continues to be resilient, led by continued job gains, while the unemployment rate remains low. However, the housing market is showing signs of cooling, while consumer sentiment has fallen. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic. And they go on to say that the invasion of Ukraine by Russia is causing human and economic hardship. The implications for the U.S. economy are highly uncertain. The invasion and related events are creating additional upward pressure on inflation and are likely to weigh on economic activity. In addition, COVID-related restrictions in China are likely to exacerbate supply chain disruptions. The committee is highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. With appropriate firming in the stance of monetary policy, the committee expects inflation to return to its 2% objective and the labor market to remain strong. In support of these goals, the committee decided to raise the target range for the federal funds rate to 1.5% to 1.75%. I'm going to stop right there. This is no longer verbatim. That means that the increase that is about to drop is going to be between 75 basis points to 100 basis points. 0.75% to 1%. This is much higher than the 50 basis points to 75 basis points that most were assuming today. I'll continue. Verbatim from the FOMC leaked document. The committee decided to raise the target range for the federal funds rate to 1.5% to 1.75% and anticipates the ongoing increases in the target range will be appropriate. In addition, the committee continues to reduce its holdings of Treasury securities and agency debt and mortgage-backed securities. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications, blah, 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 bunch of bullshit. Voting for the monetary policy action are Jerome Powell, John Williams, etc., Lisa Cook, Philip Jefferson, and a bunch of other assholes. This document should not yet be out, but the fact that we've got it and that we're able to take a look and a little bit of a sneak peek, I'd say give us a jump. And I won't be surprised to see if that scares the shit out of the markets today. Well, let's see how they react. How they react on the day so far. Bitcoin's still hanging out at 20,750. We're looking at 75 basis points to 100 basis points increase today. 0.75 to 1.0% possible. That's exactly what we're going to hear shortly from the Fed as soon as Jerome Powell starts to speak at 2:30 p.m. Eastern Time. Please, if you've learned something new, feel free to subscribe or drop a like, as it helps share this information with other like-minded investors. Brack, you're misunderstanding, my friend. It is 100 basis points because we are currently at 75 basis points right now. That means if we increase to 1.5% to 1.75%, that'd be a 75 to 100 basis point increase. Quite simple math, my friend. This was supposed to be released today at 2 p.m. The red lines that I just read out loud to you, everything in red, are the changes made to the FOMC release.
A whole bunch of different power centers in the United States, many of which we often openly discuss: the intelligence community, Silicon Valley, the U.S. government, lobbyists. Obviously, one of the most important and powerful, if not the most powerful, is Wall Street, and hedge funds in particular on Wall Street, who are at the top of that food chain. And we almost never talk about how it is that they get to be multi-billionaires without really producing anything of value, just leeching off the American economy, taking huge amounts of money in exchange for nothing. Whatever you think of Silicon Valley, they get rich at least by producing something, whatever you think of those products. These people produce nothing. They just take, and they just take, and they take. And so for the first time, not only are we seeing them have pain inflicted on them, not by people who are stealing from them or who are committing crimes, but people who have figured out their game and learned how to exploit it by doing what they should do, which is be studying it, but they're also getting dragged out into the sunlight. So for the first time, we're talking about people like Melvin Capital and Citadel and hedge fund short sellers, and understanding what it is that they're doing to this country. And it only happened, Tucker, because the internet, a free internet, when it's free, enables citizens to band together in large enough numbers to challenge these ruling class elites.
Well. Guess who decided to wake up early today?
The imperative nature of defending the internet from surveillance, defending it from censorship. It is a very powerful weapon in the hands of citizens against together in large enough numbers to challenge these ruling class elites. And that's why we talk so much about the imperative nature of defending the internet from surveillance, defending it from censorship. It is a very powerful weapon in the hands of citizens against ruling class elites, and that's why they're so bent upon seizing it back, controlling it, regulating it, and censoring it.
I think you make such a wise point. If I made $1 billion, people would say, where did you make $1 billion and for what? And I would feel incumbent upon me the responsibility to explain what I did. I never hear anybody discuss what the upper echelons of finance have really done, or as you point out, contributed to become billionaires. Like, why is that not a conversation we're having all the time?
Right. And the other thing that I think is so interesting in this particular case is you see people on the left and people on the right reacting in very similar ways, namely in favor of what these Redditors did to these hedge funds. Why? Because if you're on the right, what you believe in generally, traditionally, is free market economics.
Right.
If you're on the left, what you believe in is government intervention in the economy to help the neediest. We have neither of those. What we have is a totally rigged system where the government constantly intervenes in the economy, but not to help people who are in need, but to help the richest and most powerful, who are funded and owned and controlled by those very rich people who fund their campaigns, who pay their lobbyists, who give them enormous speaking fees when they're out.
We're on the fucking news, ladies and gentlemen. Fox News, yet again, talking about we the people. We are retail. We are the whale. And the elites are terrified. Terrified. I don't care if you're on the left, the right, the top, the bottom. I don't give a shit what you are. The fact is, we are all retail investors. Unless you're in the top 0.1%, you're getting fucked. You know what? That brings me to another thing. Eric Vizcarra says, let's fucking go. 75 points today. Appreciate you, my friend. And also, well, Aaron says, by executive order, we're going to be so fucking rich. My friends, in case you're unaware, the reverse repurchase program has increased to new all-time highs every single day since June 3rd, 2022. This was not the case in the past. We saw ups, we saw downs, we saw ebbs and flows, but it is 100% factual that since June 3rd, beginning on June 3rd, and every day from then, we have seen new all-time highs on the reverse repo program. This is a method of liquidity to allow short hedge funds and banks to maintain cash on hand through an overnight repo program, which pays them 80 basis points in interest. Over $10 trillion has been wiped out from the United States stock market this year. $10 trillion. In case you're unaware, Evergrande Group is being removed from German indices at $0.0. Not one, not two, not 10, not 20. Dozens and dozens of indices all around Germany are removing Evergrande at a value of $0. This begins today. Therefore, tomorrow, all of that collateral, all of those assets will no longer be valid. They will be losing billions of dollars in liquidity. They being market makers, banks, prime brokers, hedge funds, short hedge funds, family offices. Anybody who owns these Evergrande bonds is going to lose all of that collateral from the German indices in which they're being removed. This happens today, my friends. So tomorrow, they will no longer be on these indices. Evergrande is fucked. Not only are we on Fox, but we're on Forbes. We're all over the fucking place right now because these guys know it's coming. GameStop and AMC shares. Go ahead, brother.
We're right on the money. That's why they're all singing our song.
That's right, brother. They're singing our fucking song now. Forbes.com. GameStop and AMC shares fluctuate amongst volatile market with an impending short squeeze predicted. It's on Motley Fool, Forbes, Fox News, you name it. It's all over the fucking place now. But remember, some of us have been here a short while. Some of us have been here a long while. Jon Stewart said, this conversation doesn't end here. The one thing I've learned in all this time is that they're banking on you losing your stamina. They're banking on you losing your tenacity. The fact that this strength is in your community and it's so strong and evolving is the worst thing that could happen to them.
I remember that space call.
That was an epic space call by Jon Stewart, wasn't it?
It was. It was fucking amazing.
Absolutely fucking epic. Man, there's so much to talk about. These fucking markets are just falling apart left and right. Let's take a quick peek at crypto and see how Bitcoin's doing as we speak. 20,749. Arrow Clean Technologies, heavily shorted meme stock, up 27% so far today. 27.5% right now. 0 shares left to borrow. Not a single fucking one. The current fee rate on Arrow Clean Technologies to borrow is 1,036% and change. There's 0 shares left to borrow. This bitch is up 31% right now. It just went up 6% in a few seconds that we've been speaking. My friends, we're talking financial runs. We're going to be so fucking rich. Get the motherfucking money printer out, Jerome Powell. You're going to fucking need it. take a look and see what else we have moving real quick. Got AMC up 6.5%. Biora Therapeutics 8%. Beyond Meat 10.5%. Comera Life Sciences also looks to be squeezing, is up 20% so far on the day. The stock market's pumping hard before the FOMC meeting, for the interest rate. As we just found out, it's going to be 75 basis points to 100 basis points through a leaked document from the FOMC meeting. So we'll see if the market decides to pump or dump with this new information. But the S&P right now is up 0.75%. NASDAQ Composite 1.5%. And the Russell 1000 is up 0.79. Otherwise, we've got the VIX taking a bit of a beating, down 6.5% at $30.52. It's not priced in, my friends. It's not priced in. Let's go to the market scanner and see what's actually moving. Top percentage gainers. We've got Sea-Doo Space up 93% today at 279. They're trading higher after the company announced it is part of Collins Aerospace team, which was awarded NASA's services. So they're a space service company. And then we've got Pink Sheet Bullshit, fractional penny shares of tons of different stocks, up 50% or so, 33%. Evoke Pharma, Zongyang Financial, Genosea Biosciences, a couple more OTC stocks. Nothing really of note except AeroClean Technologies up 34%. Austin Gold up 24%. Heliogen Inc. up 24% as well. And they've got 794,000 shares available to borrow. And their current fee rate is only 12.57 on Heliogen. But there's only 11 lenders with inventory. That's actually quite interesting information right there. Looks to be squeezing a little bit as well. Got CPX and GBOX as other midday movers. Capital Power Corp. Never mind. It's looking fairly negative right now. But you know what? Before we get back to some other DD, I've got a new update for you guys on GameStop. Check this out. I think the majority of people are going to find this really fucking apish. There are some extremely bullish trading signals on GameStop regarding the equity risk premium on the trailing earnings per share. It has thus increased. Check this out. GameStop's equity risk premium on trailing earnings per share reached a recent low of negative 7.2. In the past, this has led to an increase in price. A median increase in GameStop price of 175% over the following 3 months. 9 similar occasions in the past to produce the median projection in the confidence band below have been analyzed. And there have been 9 distinct episodes comprising a total of 161 trading days. 9 out of 9 of these, 100% of those days, resulted in an upward move over a 3-month horizon with a median change of 175.19%. Target returns were between 10 and 50%. Actual returns were between 10 and 1,000%. And that, my friends, is a fucking short squeeze. Very nice on GameStop. Until that happens, the suppression will continue, and at any moment, the wheel breaks, the wagon collapses, and we're off to the fucking races. AeroClean still fucking squeezing, up 40.5% on the day. Are you not entertained? Are you not entertained? Look at that. That's
drum roll goes.
Where's Johnny Bravo?
Hey, what's up, everybody?
What's going on, Edward? Welcome. AeroClean still up 41% and climbing. Check this out. You guys want to talk Bitcoin? Let's talk Bitcoin.
My gosh, Bitcoin.
Johnny Bravo, Bitcoin's at 20,638. What do you think?
Oh gosh, I would say let's cue the fire.
Bravo. Bravo, Johnny Bravo. That was fantastic.
Insert the everything is fine meme with the fire around them.
All right, guys. Exceptional thread that must be explained regarding Celsius, which is a a very large centralized gateway to the crypto market here, basically like a broker dealer, if you will. Celsius raised $864 million of venture capital and at one point custodied $3 billion of funds for over 1 million different people. Today, they're insolvent. Celsius is a fintech app that lets you trade, stable coins, cryptocurrencies, stake your coins, get deposits, etc. In essence, it's a custodial manager, like an ETF. Vanguard and Fidelity wrap a basket of stocks into a retail-facing ETF and take a fee for rendering the service. Celsius is kind of like Vanguard, but for decentralized finance. It provides regulated access to loans and yields and takes a fee for doing so. All right, anyway, let's get down to the good stuff. Here's the CEL token, which offers loyalty rewards and discounts. Down from 68.70 cents a few days ago on the 7th and 8th to about 30 cents and as low as 15 cents yesterday. Absolutely getting crushed. Stablecoins, cryptocurrency is getting destroyed. Lost over 2/3 of its market cap this year. But even worse is the pseudo-crypto vibe is Celsius' dangerous use of meaningless platitudes and strident anti-bank rhetoric. They say banking is broken, unbank yourself, replacing Wall Street with blockchain, 99% versus 1%. But that's a bunch of bullshit. They give the promise of sky-high yields, the veneer of legitimacy, and really the biggest problems is the use of on-chain leverage and staking ETH. In order to provide a low rate of borrowing for users, Celsius accesses leverage, as in margin, through on-chain money markets like MakerDAO. This means that user deposits in assets like WBTC and they put them in DAI. It's collateralized through a lending protocol. And ETH staking on Ethereum's proof-of-stake beacon chain offers around 4.2% yields, and on Iron Finance, they're a paltry 0.2. So how do they offer this 8%? It turns out they were using an ETH derivative called STETH to pump up their headline ETH yield and attract more investors. It's a product by Lido Finance. It stands for Liquid Staked ETH, and it's one of the most innovative DeFi products. It allows anyone to earn stake ETH without running staking infrastructure. The trade-off, while it can be traded for ETH on the open market, it can't be redeemed for ETH, and not until the beacon chain emerges, and then Ethereum goes through a hard fork. Celsius bought a bunch of this staked ETH, which can't be redeemed for ETH for 6 to 12 months after the merge. So it's going to be at least a couple of years because the merge hasn't even happened yet. So they bought something for $1 that's now worth 96 cents. Due to all the uncertainty, it's trading at 96 cents to the dollar against ETH. And there's not enough liquidity anywhere for Celsius to swap out the STETH for ETH, even at a loss. They've had 565 million of this staked garbage, and there's only 143,000 of ETH liquidity in that curve pool. They opened a bunch of loans, they took user deposits, and Celsius traded them for this STETH. They now owe a lot of money, and they don't have the reserves to pay you back. Celsius is insolvent. This is where Celsius went from plausible to gross negligence. They pause withdrawals, transfers, freeze users in place, and giving them an awful choice. Top up their own collateral to save their loans or get liquidated. Now let me back up from this thread because it's an exceptionally long thread, and there's several different issues going on here. This guy really knows his stuff. I was really impressed when I read this thread. And there's more, because it's like sections of threads. So basically, back to what we started on. The on-chain leverage for Celsius shows that Celsius Network has a liquidation shown around 22,500 Bitcoin. 278 million in DAI debt, making it the largest individual debt position. They have 164% collateralization. Long story short, they're way over leveraged. They have a 9-figure loan on Maker, and their lending collateral is falling in value. And so is the customer's lending collateral. Anybody that's within Celsius, trading in Celsius, as a broker. As a retail investor in the broker Celsius, right? So CEO's been, they call it on a roadshow, propping up confidence in Celsius and liquidity reserves, claiming safety till the very end. And we've watched it drop as Ethereum basically has dropped from 1,600 to under about 1,000 just yesterday. Because this is from the 13th of June. And just yesterday, in case you guys weren't watching, Ethereum was around 1050. So even the day before that the withdrawal freezes occurred, the CEO was saying that it was not going to happen, that they have enough liquidity. They fought until the very end and screwed over a lot of people. This is going to lead to a situation where you've got multiple stable coins and brokerages like Celsius. It's just the beginning. Coinbase. All of these are going to be facing a liquidation at some point as the crypto prices continue to fall. And there's not enough liquidity. As you noticed on staked ETH and ETH, there's just not enough of it to get out of their positions. This is what that CEO looks like right now. And in case you guys weren't aware, the president of China, or should I say the CCP leader, Xi Jinping, signed an executive order to conduct a special military operation to ensure the national sovereignty of the People's Republic of China. It's on the Telegraph that Xi Jinping has signed a directive allowing for uses of the military, the same tactics used by Russia to invade Ukraine. They don't have to declare war to invade their own sovereign nation, is what China's saying with Taiwan, which is the same thing that Russia said with Ukraine. Now, I don't always say I told you so, but when I do, it's because I told you so. Thank you, Pantheon, for that awesome meme, man. That thing's hilarious. 3 mass layoffs happened yesterday. Let's see how many mass layoffs happened today. Hedge fund 3 Arrows Capital is insolvent. Hedge fund 3 Arrows Capital is completely insolvent. These rumors have been confirmed. A crypto-focused Singapore-based hedge fund is insolvent and may become the latest high-flying company to crash in the bear market. They sold $40 million worth of Lido's staked Ether early Tuesday. Do you see the connection now? 3 Arrows Capital sold $40 million worth of Lido's of the staked Ether. That's the same STETH that we were talking about with Celsius. The firm, which has backed Avalanche, Solana, and Terra in a $100 million NFT fund launched August, did not respond for a comment. The founder said his firm is in touch with counterparties and is committed to resolving the situation. Celsius Network has been facing pressure to sell its STETH holdings in order to make good on customer withdrawals. And we know that they don't have sufficient amounts, and there's not enough liquidity in the staked ETH to get out of their positions. Hawk-eyed observers noted that Celsius was not the largest seller of staked ETH over the past several days, not by a long shot. People think Celsius is the biggest staked ETH dumper, but it's Three Arrow Capital, and it's not even close. They're dumping on every account and seed round address they have. Most look like it's going to pay back debts and outstanding borrows they have. Their fire sale began in May, right after the collapse of Terra's UST stablecoin, according to DeFi analysts. $400 million of Three Arrows positions have been liquidated. There reports that another $300 million is at risk of liquidation on Aave and Compound. At the time, staked ETH briefly fell to 95 cents on the dollar relative to Ether, and 3.0 Capital pulled 127,000 staked ETH in liquidity from Curve, $246 billion worth at the time. They've been in and out of Aave, staked ETH, etc., until the selling began this week. In several transactions, the hedge fund withdrew the staked ETH it had in Aave, an interest-bearing DeFi protocol, and then exchanged 38.9 thousand staked ETH, around $40 million for ETH. And this is at a point where there's no liquidity with which to do so in ETH. That's why we're seeing Ethereum go down to $1,000 over and over again and continue to retest it. Literally, the moment Three Arrow Capital capitulates after holding STETH the whole way down, he posts bullish about it. How much do you... Never mind. He says, how much do you have to hate people around you to do this? Insane. Hedge funds are going insolvent everywhere you turn. Bitcoin is sub 21K, just like I told you it would be several days ago on this very channel. Looking at it live while it was sitting at 26,000, I told everybody here, Bitcoin will be at 21K by tomorrow. And that's exactly what fucking happened. Currently hanging out at 20,811. The S&P's up 0.9%, the NASDAQ Composite 1.4%, and the Russell 1000 0.93%. Aero Clean Technologies continues to fucking squeeze and is up to 52% gains on the day because there are no shorts left to borrow, and the current fee rate to borrow Aero Clean Technologies is 1,036%. We're going to be so fucking rich by executive order of the President of America and China. Speaking of the president, here's Hunter Biden bragging about the power he has over Joe Biden. Audio from Hunter Biden's laptop says, quote, "He'll talk about anything that I want him to, that he believes in. If I say it's important to me, then he will work a way in which to make it a part of his platform. My dad respects me more than he respects anyone in the world. I had the support to know I can do anything."
Can do anything. A bombshell new audio of first son Hunter Biden bragging about his influence over his father. That was back in December of 2018. This tape was found on an iPhone backup stored on his abandoned laptop. Remember, Hunter reportedly told Biden's associates that he's the president's closest advisor. Dagan, I wonder if it's Hunter Biden's idea to spend all of this money and stoke inflation now at a 40-year high. He says he's his closest advisor. He'll do anything he says.
Well, and Joe Biden has said about Hunter that he's the smartest person he knows. So this is kind of a game of circular idiocy. But it's more insidious.
Not much of an advert, is it?
Because of the years of influence peddling by Hunter Biden. We still have not
the bar is low on that one.
All of
That's
the
like picking
financial
between Dumber and
interests that
Dumber.
this family has
Yeah, rock and a hard place.
countries that are in peril or perilous to the United States at this point. But when Joe Biden gets up in front of the American people, or the AFL-CIO yesterday, and angry and talking about, I don't want to hear about these lies about reckless spending. We're changing people's lives. That does feel
81 million votes.
that his son
Changing
voted for
people's
him.
lives for the fucking
Yeah.
worse.
Steve, what do
Yeah,
you think?
I wish he'd stop
Sure,
helping.
changing people's lives. That's true.
Freaking
Not the way he
tweets like,
intended to
oh
say
yeah,
it,
we're
but they
changing
sure
the
are
economy,
changing
everything's
people's
good.
It begs the
Hilarious.
reaction, for the worst.
All right, keep it down.
But in terms of, it's another confirmation of the big lie when the president says that he never knew what his son was doing, had no clue, and therefore can't be held accountable if Hunter did anything wrong.
Even old man Steve Forbes is going at him. Listen to this, guys. Check this out.
Worse. But in terms of, it's another confirmation of the big lie when the president says that he never knew what his son was doing, had no clue, and therefore can't be held accountable if Hunter did anything wrong.
Wow.
He had no idea where all that money was coming from, paying his bills and things like that. So this is just another confirmation, another lie from a president who, as Dagan referred to earlier, hard but true, liar in chief.
And we all know about the tens of millions of dollars that
Throwing his own son under the bus, and he's meant to care about us. Yeah.
I love it. What a piece of shit. What a scumbag. That, my friends, is the President of the United States of America, Joe Sleepy Biden, and his son, Hunter Biden. Won't even give him a nickname. You can give him your own nickname.
You can't even because he's such a mess.
Yeah, man, it's like I can call him anything under the book. It's not even fair.
Yeah, it doesn't even line up. There's so much more.
Until they impeach Joe, I'm gonna build Lego.
That sounds great, my friend.
Oh God, make them impeach him quickly.
Build a prison Lego.
We've broken the 2,000 viewer resistance level. Please drop a like. Share this if you found some value in it. Don't forget, ladies and gentlemen, now not only are we on Fox News, we're on Forbes, we're on Motley Fool, we are all across the board. Solactive, German index engineer, is removing dozens and dozens of Evergrande bonds from the indices. China Evergrande Group will be removed from the index at a price of 0 beginning tomorrow. This happens today, and as of midnight tomorrow, these will no longer be in these German indices. And there's not one, there's not two, but there are dozens and dozens. And at the same time, the Fed broke the highest reverse repurchase program again. Let's take a look at today's RRP.
It's a coincidence.
Just a coincidence, right?
Yeah.
Oh, of course. Let's go check out the reverse repo operations. The overnight daily bailout for 80 basis points to these banks in exchange for treasury notes. Oh, look at that. It's the first time we have not seen a brand new high, all-time high on the RRP since June 3rd. But still awfully close. Yesterday's all-time high was $2,222 billion. Today we've got $2,162,924 million worth of reverse repo across 96 counterparties in which they exchange U.S. Treasury notes for dollars back and forth as a quid pro quo with the Federal Reserve at a 80 basis point award rate in order to prop up the stock and crypto markets. If you ask me, the only reason this is lower is because of the massive liquidations that have occurred on cryptocurrencies that we just discussed. Staked ETH, Ethereum, Bitcoin, Aave, Curve, you name it, it's all across the board. The stock market yesterday and cryptocurrencies everywhere. It's the only reason the reverse repo is not at a new all-time high for the first time since June 3rd, 2022, implementation of Executive Order 13959 as amended. That's the name of it. Fantastic. Unbelievable.
I think when he's hitting new lows.
Shit. You're not even fucking kidding, man. It's retesting those lows over and over again. 20,549 right fucking now. Johnny Bravo, what do you say, my friend? What's next for Bitcoin?
Cue the fire.
I'd say.
I'll see you tomorrow.
Retesting those lows yet again. We were
17K, man, possible.
We saw 20,098 earlier today. As a matter of fact, the low we saw was 20,079 on Bitcoin so far today. And I suspect sub 20K will come by tonight. Before trading hours tomorrow, sub 20K is likely on the horizon. And there are many, many people trying to prevent that to keep themselves from being liquidated. And as we speak, the meme stocks, Aero Clean Technologies, keeps fucking running. It's up 56% now, 1,036% borrow rate, 0 shares left to borrow. Absolutely incredible. And still running.
Boss, did you see my thing today? My post? So they run out of stuff to say. So they refer to Chinese finding with their Sky Eye thing, alien civilization signals.
They're blaming it on China and the aliens. Surprise, surprise.
They're saying China had found signals of alien civilization. What the hell?
If you're just joining us on the think tank, please note that the Telegraph has advised everybody that Xi Jinping has signed an executive order allowing for non-war uses of the military, the same tactics that Russia used to invade Ukraine. This was just yesterday at 6 p.m. We're going to be rich by executive order of Xi Jinping and President Sleepy Joe Biden.
Special operation.
At the meantime,
they're still talking about January 6th on some of these outlets. Unreal.
Evergrande is being removed from German indices, dozens and dozens of them. GameStop and AMC is in the talk of the town across Forbes, Fox News, you fucking name it. Jon Stewart's covering it. We are looking good, ladies and gentlemen. Three Arrow Capital is insolvent. Now that Three Arrow Capital rumors appear to be true, the question shifts to how many counterparties are they exposed to.
Hot mic, Wolfie.
It's all good. Hoping for an orderly resolution, but sometimes markets aren't orderly. In other news, the liquidation price on Celsius maker Vault has moved down to 14K. Celsius liquidation is facing Celsius is facing liquidation at $14,000 a Bitcoin. They've got $527 million of collateral locked up at a current price, with a collateralization ratio of 226%. They're in talks with restructuring lawyers and are looking for additional financing right now. Something else you should be keeping your eye on is the USDD. It has lost its peg. More and more stablecoins are going to lose their peg. And we saw Janet Yellen tell us specifically in front of Congress during the September 2021 Congress hearing, letting us know that stablecoins and over-leveraged hedge funds are the absolute largest risk to financial markets.
Oh man, I can't wait for the Tether meltdowns.
Tether meltdowns between Evergrande and Staked ETH. Tether is in bad shape, my friends.
Yo, boss, there was I don't know if I linked that video one time, but there was a guy that did research on Tether being the biggest transaction of all, basically, crypto. So it's responsible for 90% of all manipulation on all cryptos.
And nobody has any proof
has been down spiraling.
That's right. And nobody has any proof as to why or where and how Tether is actually holding their collateral.
The most corrupt, basically, currency.
On September 28, 2021, testifying before Congress on the CARES Act, Janet Yellen told us, quote, there are issues relating to hedge funds and the possibility of financial runs. Of issues there leading to financial runs. There you go. That's the quote. I remember it quite clearly because this, my ex-girlfriend, made me break up with her when she could not tell everybody about inflation. The lying bitch. Lying bitch. I couldn't be with somebody like that. So keep an eye on the USD DPEG. Is now down to about 97 and falling. To top it off, today's D-Day for the Fed's rate hike decision. And we already saw the Fed tell us between 75 to 100 basis points. Vic says, love being here. Look forward to your content every day. Thank you, my friend. I appreciate being here with you, as does the think tank. Thank you for your support and your contributions to the think tank. Too kind. What a crazy few days, guys. Mortgage-backed securities, for those of you that are unaware, have begun to tank. They are at an all-time low. Vanguard Mortgage-Backed Securities ETF is at an all-time low of $46.23 from its inception in 2009. Mortgage-backed securities are an indication that the underlying mortgages and tranches of mortgages, whether they be residential or commercial, to be defaulting and losing value. And as the current situation with tapering has beginning today, even before, it's literally supposed to begin today, in which the government is reducing the amount of mortgage-backed securities that they're buying. Since last week, we've already seen mortgage-backed securities going no bid, which means that nobody's bidding on buying this garbage. Banks own $2.9 trillion in mortgage-backed securities, and the Fed owns $2.8 trillion in mortgage-backed securities. If they're losing value and banks are hurting for liquidity, why are they going to buy the mortgage-backed securities from the Fed? They're not. In addition, the Federal Reserve is waiting for these mortgage-backed securities to roll off, mature, and roll off their asset balance sheet. In order for this to happen, they would have to stop buying entirely, and they would have to wait 9 years. 9 years for these mortgage-backed securities to roll off their balance sheet. Not going to happen, my friends. That's what a $9 trillion balance sheet does to you. Mortgage-backed securities are crashing, and credit default swaps are flying through the roof all across the world, not just in places like Ukraine, but all across the world. Europe, America, North America, South America, Asia. Credit default swaps are the hedge for mortgage-backed securities. So when these MBSs go down, CDSs go up. Very quite simple, and that's why this is occurring. You're going to see this continue just like it did in 2008, probably an exacerbated pace. Mortgage-backed securities auctions are going bidless, and the Fed hasn't even started QT yet. They're supposed to start today. They're strong. Yeah, pretty much. They've just stopped buying as much. Just from reduction in purchases. Not even a big reduction, a small reduction. This is the Fed's mortgage-backed securities holdings in green, and in orange you've got the S&P CoreLogic Case-Shiller National Home Price Index. The Case-Shiller Home Price Index accounts for inflation and tells you the overvaluation of a stock or home price. In this case, home price, national home prices. This was created by Nobel Prize winning laureate Dr. Robert Shiller, many, many years ago, and it has shown to work on indices and home prices many times in the past. Back in 2008, the Case-Shiller National Home Price was overvalued and it was sitting at around 1.2. In 2013, the Case-Shiller Home Price was overvalued around 1.8. As of today, actually, yep, that's correct. As of today, it's 2.5. No, actually, I apologize. Year over year, I should be looking at the right. It went from 0 to 10% up to 20% right now, and it has just started to downtrend. This tiny, tiny downtrend here is the very beginnings of what you saw in 2013 and 14. It's the very beginnings of what we saw in 2008. My apologies, back here. It's barely even on the screen. And as it was overvalued, we are much higher valued than we ever were at that point. Look at the federal mortgage-backed securities holdings. They had under 100 billion worth in 2009. They cranked up the quantitative easing, they cranked up the buying, the spending, and that's why it's been so easy for so many YouTubers and just retail traders to make a killing on the market without even knowing how to fucking trade. It's been easy up until now. We are in a bear market, and things are about to get a lot more difficult for a lot of people very, very quickly.
Didn't Schiller put out a PE ratio on the inflation as well?
Well, it's actually the beauty of the Case-Shiller PE ratio and the, yes, he does have it for the S&P and the home price index, but it's actually does account for inflation, which is what makes it so much better than using something like EPS, for example, and other things like that do not account for inflation. Spy News said U.S. interest rates increased by 0.75%, the sharpest rate hike in 30 years. They deleted the tweet, but we already saw that we had the leaked information from the Federal Reserve FOMC meeting. There is now 0 shares of AMC left to borrow. 0 shares of AMC left to borrow.
Yeah, really, whatever.
Let's see if the FOMC press conference is giving us any feedback yet. Not yet. We're looking at 2:30 p.m. Eastern Time for the FOMC press conference. We'll see what these liars have to say.
A whole bunch of different power centers in the United States, many of which we often openly discuss, the intelligence community, Silicon Valley, the U.S. government, lobbyists. Obviously, one of the most important and powerful, if not the most powerful, is Wall Street and hedge funds in particular on Wall Street, who are at the top of that food chain. And we almost never talk about how it is that they get to be multi-billionaires without really producing anything of value, just leeching off the American economy, taking huge amounts of money in exchange for nothing. Whatever you think of Silicon Valley, they get rich at least by producing something, whatever you think of those products. These people produce nothing. They just take, and they just take, and they take. And so for the first time, not only are we seeing them have pain inflicted on them, not by people who are stealing from them or who are committing crimes, but people who have figured out their game and learned how to exploit it by doing what they should do, which is be studying it, but they're also getting dragged out into the sunlight. So for the first time, we're talking about people like Melvin Capital and Citadel and hedge fund short sellers and understanding what it is that they're doing to this country. And it only happened, Tucker, because the internet, a free internet, when it's free, enables citizens to band together in large enough numbers to challenge these ruling class elites. And that's why we talk so much about the imperative nature of defending the internet from surveillance, defending it from censorship. It is a very powerful weapon in the hands of citizens against ruling class elites, and that's why they're so bent upon seizing it back, controlling it, regulating it, and censoring it.
I think you make such a wise point. If I made $1 billion, people would say, where did you make $1 billion and for what? And I would feel incumbent upon me the responsibility to explain what I did. I never hear anybody discuss what the upper echelons of finance have really done, or as you point out, contributed to become billionaires. Like, why is that not a conversation we're having all the time?
Right, and the other thing that I think is so interesting in this particular case is you see people on the left and people on the right reacting in very similar ways, namely in favor of what these Redditors did to these hedge funds. Why? Because if you're on the right, what you believe in generally, traditionally, is free market economics. Right. If you're on the left, what you believe in is government intervention in the economy to help the neediest. We have neither of those. What we have is a totally rigged system where the government constantly intervenes in the economy, but not to help people who are in need, but to help the richest and most powerful, who are funded and owned and controlled by those very rich people who fund their campaigns, who pay their lobbyists, who give them enormous speaking fees when they're out.
Preach, my friends. We are all over the news. Without question, AMC and GameStop are the talk of the town right now for a reason. I don't care if you're from the left, the right, the top, the bottom. I don't care what you are. We are retail. Unless you're a fucking billionaire, we are dumb money apes. Plain and simple. That's what these assholes think of us.
Yeah, we're united by a common enemy.
Exactly. None of us care where you come from. If you're a man, a woman, if you're gay or straight, what color your skin is, where you come from. It doesn't matter what language you speak. Because at the end of the day, we all speak the same language. We speak with greenbacks. We speak with gold. We speak with meme stocks. Meanwhile, we've got markets collapsing all around us. Cryptocurrencies like Celsius falling apart before our eyes. Bitcoin at new lows. 20,000 on Bitcoin. Pretty soon, we're going to see a lot more liquidations, just like we've seen in the past with other stable coins. Bitcoin's hanging on desperately to 20,706 right now. And Aero Clean Technologies, the fucking star of the day, with zero shares left to borrow, is up still 67% and climbing with a 1,036% fee rate to borrow. 0 shares available left to borrow. This thing's going to keep on running, ladies and gentlemen, because they've lost control of AeroClean and they're losing control of a lot of stocks. That's why 3 days ago, AeroClean was up 190%. Liquidity has to come from somewhere as positions get closed out. It doesn't matter if it's from cryptocurrencies, stablecoins, if it's from staked ETH. It doesn't matter if it's from mortgage-backed securities or ISDA swaps or contracts. It doesn't matter if it's from equities. But they're pulling money out of every orifice possible, including the reverse repurchase program, to the tune of $2,190,890,000,000 today alone, with an 80 basis point bailout every fucking night by the Fed.
Yeah, I can guess they even pulled some money out of Kenny G's little booty hole.
I guarantee you Kenny G's pulling money out of every orifice possible to try to maintain his positions, because the moment that this stock market, that their equities lose a little bit too much value, it's not just going to be AeroClean. It's not just going to be Redbox. You're going to be seeing shitloads of meme stocks, probably the most heavily shorted first, begin to make movements that you've never imagined. And then after the stock market probably crashes, after these meme stocks run, in the near future, you're probably going to see precious metals squeeze in the same way that meme stocks are about to. The over leveraging on precious metals is so disgusting that it makes me sick to my stomach when you think about it. I'm going to take some of my billions of dollars with an S that I make off AMC and GameStop and all these other stocks, meme stocks, and I'm going to invest a good portion of it in precious metals like silver. Why? Because the over leveraging that's occurred on precious metals, including silver, is going to lead to a massive, massive squeeze. Remember, ladies and gentlemen, this is not just about GameStop. This is not just about AMC or any of these other meme stocks. This is a market-wide bubble. Credit default swaps are going to fucking skyrocket. Precious metals are going to fucking skyrocket. Meme stocks are going to skyrocket. All sorts of things that you've never imagined. Marijuana, food, gas, oil is going to skyrocket. And then when the market crashes, what do you think is going to happen to oil? Hey, Johnny Bravo, what happened to oil back in 2008 when the market crashed? What happened to the price of oil per barrel?
Oh my gosh, guys, it went down.
It went negative. It went negative. Barrels of oil were going for negative $30 a barrel. Negative 37 a barrel, if I recall.
Got me off guard, bro.
It's all good. It's okay. Open interest in silver is equal to 230% of all silver in the COMEX vaults. 1,080% of the registered silver that is supposedly used to back the contracts.
That's nickel squeeze on steroids right there.
You guys thought nickel squeezing from 50K to 100K was a big deal? Wait until you see what happens with meme stocks. Wait until you see what happens with precious fucking metals. Holy shit, guys. There's 71.4 million troy ounces worth of registered, warranted metal used for futures deliveries. That's a deficit of 559,000 troy ounces. There's 265 million troy ounces eligible, an unwarranted metal that can be moved to registered. That's a deficit of 613,000 troy ounces. Total, combined, registered and eligible, that's a deficit of 1.172 million troy ounces of silver for the COMEX. The open interest, the total open futures contracts, 5,000 ounces per contract on the COMEX, which we're going to use and abuse when this is over as well. We're going to rape the fucking COMEX. 776.4 million troy ounces worth of open interest. And if those contracts are executed, those futures contracts, because we've heard from Thomas Peterfee just discussing GameStop and AMC and other things, when retail exercises contracts, it leads to a forcing of delivery of shares, and the brokers and broker dealers must buy it back at any price, which could, I quote, lead to unimaginable highs, end quote. That's 155,283 contracts at 5,000 ounces apiece. There's a huge,
That's a lot.
Huge deficit. 1,087% of all registered silver short on these open interest. And then you got assholes like Bank of America who's leasing silver from JP Morgan and then turning around and shorting the silver even further on the COMEX. Ladies and gentlemen, this is why we're going to be so fucking rich. Absolutely insane. Anybody who's smart enough to understand what the fuck I'm saying should go do their own due diligence. Go check the COMEX for yourself so you can see that we're not bullshitting you and make your own decisions, because we're not here to offer financial advice. We're just here to point out the facts. Like another short hedge fund is bankrupt. Quant Macro Hedge Fund, ADG, that had $3 billion, billion with a B, as in bitch, which is what Ken Griffin is closing its doors. In the meanwhile, we've got a borrowed change of 440,000 increase of BBIG shares today. A maximum cost to borrow of 395% on BBIG, with an average cost to borrow of 357%, and a minimum cost to borrow of 222.8% on, according to Ortex, reported data. One thing I wanted to bring up, Ortex says that they provide all reported data, that it's not self-reported. Here's the bullshit. They do report the data from the exchanges, but the short hedge funds and banks report the data to the exchanges. They self-report it. Hey, Edward, if you're with me, how many years did Credit Suisse not report any short data to FINRA? How many years, bro?
7 years.
7 fucking years. Was it Credit Suisse? It was.
Yes, sir.
Did not report. And that was from 2015 through when?
To 2022.
Oh, this
April
year.
of 2020.
This year.
Yeah.
So you're telling me that Credit Suisse, that we have documentation that shows that FINRA fined Credit Suisse $400,000 for not reporting short bets for 7 fucking years? Therefore, it is self-reported. It's self-reported to the exchanges, and then only 85% of the exchanges report to Ortex. So really what we should have here is a vast, vast higher number for Ortex, for BBIG, for AMC, for GameStop, and stocks like Aeroclean, AERC, stock ticker AERC, currently up, let's see, 64% on the day, with no shares left to borrow and a 1,036% cost to borrow. 1,036%, ladies and gentlemen. As you can see, it says here, not shortable. SLB availability, 0. Not fucking 1. God, that's so funny. Edward, 7 fucking years, bro? Jesus. What a joke. Bitcoin's pushing hard to 21,000. 21,000. Let's see what LYT's looking like. I heard Lightest Technologies is running pretty hard. Lightest Technologies. Bingo. Zero shares left to borrow. Lightest Technologies says pricing of 12.4 million, IPO at $4.75 a share. It opened today at $21.99, high of $24.98, and a low of $17.15. Their stock soared 350% following the downsized $12 million IPO. And they did see multiple volatility circuit breaker halts. Yep, pause due to volatility on the Dow Jones. Zero shares available to borrow. Very, very cool. Thanks for the heads up on that, my guys. Real quick, I wanted to take a second to see what option trader Profit Taker said. He said, my friend who worked for Bank of America for 5 years. My friend worked for Bank of America for 5 years, and they just laid off their whole department, over 2,000 people, and didn't give any severances or anything. Holy shit, man. I'm really sorry to hear that. That's terrible. Okay, well, I guess we figured out Bank of America's next on laying off thousands of people. We saw 3 companies yesterday lay off thousands of workers. Tony H., thanks for your contribution, my friends. He said, thank you for keeping us going, man. So much damn knowledge. That's why we're here. That's why we've banded together. Not just myself, but everybody here in the think tank that's able to join us. Zumbach, Cash Money, Pantheon AMC, Randall Cornett, AMC Bigums, Edward Britchick. Anybody who can be here with us is usually here with us. And I greatly, greatly applaud and appreciate you guys for taking the time out of your day to come in here, to share, to provide information, and to learn together. Because this is the way that we come up, that we get ahead, because we are retail. We don't collude. We don't talk prices. We don't talk price points. We don't agree on when to buy or sell, what to buy or sell, or how. All we do is discuss due diligence, technical analysis, and make our own fucking choices, because we are smart money apes. We are the retail whale. Where's my man Wolfie at?
Oh boy.
Oh boy.
How you doing, boss man?
Doing great, bro.
Good. Great show as always. Great info.
Thanks, my brother. You know what? I want to hear what you have to say about this hedge fund former hedge fund manager. Basically talking about all the other hedge funds that are about to go out of business. Check this out.
Could hedge funds be the new canary in the economy coal mine? Well, the performance of Tiger Global, this is one of the biggest hedge funds in the entire industry, down 52% just this year, clocking $17 billion in losses, much of it attributed to huge investments in Silicon Valley unicorns, which have recently floundered, along with the tech sector, right? Then there's D1 Capital Partners, which last year posted a gigantic portfolio gain of 70%. It's now scrambling after down 23% year to date after having borrowed $2 billion to take stakes in private companies whose valuations, you guessed it, have now plunged. And then last month, Melvin Capital's Gabe Plotkin pulled the plug on his fund after wrong-footed short bets on GameStop, among other names. As many hedge fund traders find themselves on the wrong end of the markets, which are either in or hovering around bear territory, is the worst yet to come. Let's bring in hedge fund veteran Raj Rajaratnam. He founded and managed the Galleon Group hedge fund until an insider trading case forced its closure in 2009. Raj now runs his family office, Cinnamon Global. How much worse is this going to get? I mean, these are just a couple of names that have reported their very bad performance.
Yeah, I think it's going to get a lot worse, Liz, because what I'm astounded by is the lack of risk discipline in these hedge funds. We talk about asset bubbles in meme stocks. We talk about bubbles in SPACs. We talk about bubbles in cryptocurrency. But these are supposed to be some of the most sophisticated investors. And the reason people give 2% management fee and 20% incentive fee is to manage the risk in down markets. What we've seen is that the large hedge funds, long-short equity hedge funds, have got into SPAC investing, have got into private equity investing, got into venture capital investing, which is not their traditional expertise, and they're borrowing money. So when the market turns, they're not able to be flexible and move quickly.
What amazes me is people, as you say, are paying these guys to be much smarter than the rest of us in the room. And look what is happening here. When the markets flip a switch and the tables do turn, that's when, as Buffett...
Ladies and gentlemen, we got 75 basis points. I'm going to take a quick pause. 75 basis points has been announced by the Fed, as discussed earlier. Let's see what happens to markets. Well, my friends, don't be surprised to watch them start ripping a little bit here.
Oh, look at the spike and reversal on the SPY.
Oh, I bet.
That's
the S&P
interesting.
is up 1% at this moment. Did they start tanking yet?
No, not really, but I'll take a screenshot and put it in the chat. It's a real beautiful movement.
Holy shit! You're not lying. Excellent. Let's
Just
go back
quickly-
to cinnamon.
Oh, the VIX is alive.
Your VIX is moving.
Likes to say,
That's
you
great.
see who's been swimming naked.
I think
as
it's
the time
getting.
goes out.
I think it's baiting people in to fill the positions before dumping on SPY.
Let's hold off 1 second. Wolfie, listen to this. Galleon Group hedge fund founder.
Well, I know you can't name names, but what types of bets have gone so wrong way that we will start to see some hedge funds that have made those bets maybe go under?
Well, if you're down 50%,
5-0,
you need to make another 100% on your capital to get to break even. So if you start at 100, you go to 50, now you have to double the 50 to get to 100. So there's going to be a lot of hedge funds that are under what they call their high water mark.
SPY's tanking.
And they're not going to work for free, so some of them will close down and possibly restart again.
And then their investors come knocking at the door as well. It just starts falling like dominoes, saying we want to pull our money out.
So I think there are a whole bunch of hedge funds that will close shop, either because investors are taking money out or because they don't want to stay the course.
Lost. Down. It's still up 0.43%.
So the most important thing to be a hedge fund manager is to
But
manage
it's still
risk.
falling.
And that's why investors give you the high incentive fee.
Hence the term hedge. You're
correctly.
supposed to hedge. Let me ask now, they also are getting another stumbling block thrown at their feet, and that is the potential rule change to trading that Gary Gensler, the Securities and Exchange Commission chair, wants to make. Hedge funds make massive block trades. How do you foresee his changes, potentially involving things like ending payment for order flow practices, affecting hedge funds, and quite frankly, could any kind of contagion spill over to the retail investor?
So this payment for order flow is mainly aimed at the retail investor. Today, the retail investor accounts for about 20% of the trading. So firms like Charles Schwab, E-Trade, the big retail brokerage firms, Ameritrade, Robinhood, they shop these orders to a firm like Citadel or Virtue, and they get paid for that order flow. In fact, these brokerage firms last year made $3.8 billion paying the brokerage firms for order flow.
3.8 billion.
Now, what you do if you're E-Trade or Charles Schwab, you give it to your favorite execution broker. And while the public thinks they're getting no commission, they're not getting the best execution price. So there's commissions built into the system. So I think it's a great idea that Gensler is trying to make it much more competitive and put it into an auction system. But knowing Washington and knowing the lobby of the brokerage firms, I'm not optimistic that anything will get done in the near future.
Well, you are running money for your family office. The markets have been very hard to anticipate. What do you see as an opportunity right now, Raj?
Yeah, so we invest in disruptive technologies. And we've been very cautious on the market. It's a very, very challenging year this year. What we are seeing now is the valuations have compressed. And what we are doing is looking at companies or sectors that are somewhat recession resistant. So there are 3 sectors we've identified. One is cybersecurity. Every day, people are trying to hack companies in the United States. We look at cloud computing, which is important, and electric vehicles. This trend towards clean energy and electric vehicles is a secular trend. And within that, we have companies that we've invested in.
Good to see you, Raj. Please come back because I know this hedge fund story is far from over.
What do you think about the fact that his hedge fund was closed down and due to insider trading scandals, and then he just opened a family office?
Yeah. It's like, how the hell does that work? and then bring him on as an expert to tell everyone what we've been telling for months. It's just like, it's a crazy world. I couldn't help but listen to what was being said, and a song kept playing in my head. And it's bye-bye, hedge funds. Bye-bye.
That's great.
I know a lot of people thought they'd protect them, but no way. They don't like hedge funds any more than us. So I always see the hedge funds, a vast, vast majority of them going, and good riddance.
Strange. I keep hearing another song by Queen.
How many hedge funds is that
I
today?
thought what he said was actually...
You're like 4 hedge funds today?
Yeah, an element made true, but ultimately for everyone else, I'm sure we all clicked it. It's a domino, it started. There's too many of them and it's going to get quicker and quicker, so bye-bye, game over, won't miss you. Ta-da.
The flamethrower has started and cockroaches are running away. They're burning.
Yeah. It's like they don't know who to throw
hilarious.
under the bus next.
It's like one of us, none of us.
Yeah, it was them, maybe them. Over there, it was them.
Yeah, it's like this. It's like the classic Spider-Man meme. It's like, no, it's his fault. No, it's not his fault.
Dog eat dog time. If the writing's on the wall and the end is near, it's dog eat dog time. Cover what you can, get rid of what you can't, lie about the rest.
Absolutely. This is the University of Michigan current economic conditions in red, and the S&P, the SPX, S&P 500 in black. And as you can see, just back in 2008, when University of Michigan consumer sentiment went from 108 down to 62, well, the stock market fell pretty far from 1,500 to 800. Today, the University of Michigan consumer sentiment has fallen from 125 down to an all-time low of 55 and 55. The S&P has really only corrected from 4,500, or should I say 4,600, well, to 3,700 or so. It's got a long way to go, my friends. This time there's no federal funds rate, no interest rates to be cut. There's no quantitative easing that can occur without further hyperinflation. There's no way out, ladies and gentlemen.
The noose is tight.
The noose is tight. Absolutely right, my man. You take that into account with everything going on with meme stocks and precious metals, mortgage-backed securities around the world, credit default swaps, Evergrande going bankrupt and being removed from dozens of indices today, which will show effect on the stock markets tomorrow as this collateral is removed. Then you've got hedge funds. You've got further hedge funds going bankrupt, just like we've seen today.
Yeah.
4 hedge funds today announcing closures. Celsius and Stablecoin.
It can take forever to get. Sorry, mate.
Go ahead, bud.
It can take forever to get to the end, but the end moves real quick. And if you look around, where can you go and make money at the moment? Where in the markets? Where in crypto? Where in housing? Where can you go and put money and make money at the moment? You can't. So everything you owe is coming back to bite you. You're going to have to pay. Hey.
Absolutely right, man. Keep going if you want. We've still got 15 minutes before the FOMC meeting. And they're always late.
I just don't see how they can make money anywhere. Wherever they've put their bets, wherever they're already in play, they're in play. The only thing left for me at the moment, which stands out as an obvious, but it's only to keep you in business after, is to short. And if you short, you have to go against something you might still be holding. And although it's dropped, blue chip stuff has dropped, it hasn't dropped, 40, 60, 80%, which it could well do because of the leverage and everything you've educated on everybody. So the only chance they might get of a bit of a survival, a bit of breathing space, is if they end up going out on the puts and shorting the markets and stuff. I see somebody took out a huge one, I think, against Japanese. He did a Soros. He shorted the Great British Pound, the Bank of England, nearly bankrupted the Bank of England back in the day. I see somebody put a $2 billion short on Japan. But unless you're betting against countries or you're putting everything on for the market to crash, where are you going to make money? So liquidity's gone.
You're absolutely right.
That's good for us.
Further proof of that? You want to know how many shares of on loan for AMC are available right now? Or how many shares are out on loan?
Cool.
An all-time high. 195 million AMC shares are on loan right now. This is 90 million more than last June 2021 when AMC saw its all-time high of $77. The on-balance volume on AMC has not dropped. It is still above 4.4 billion on the 2-year chart because millions and millions of retail investors own 90% of the float on AMC, thus leading to the situation now with 195 million shares on loan just to keep the price from running out of control as of right now. Ladies and gentlemen, if that's not fucking winning, I don't know what is, because it's only a matter of time before that comes 200 and the cost to borrow skyrockets even more. Next thing you know, markets, equities lose further value, and we see further devaluations on stocks. Then you've got meme stocks like AeroClean with only on 35 million volume, but still making a respectable 51% gain on the day. 51% gain. Absolutely massive.
And just a couple of days ago, it was only 190 million. They returned 31 million and they reborrowed 36 like a revolving door.
On AMC.
And the way they can do that with more on AMC, the way they can do that with more shares in the institutions own, because institutions only own about 190, is through margin accounts. So guys, if you're not using margin, double check that your margin settings aren't turned on.
Correct. Look at AMC right now. Zero shorts available to borrow on AMC with a 9.4% cost to borrow as of right now. There are absolutely zero shares available to short. Phenomenal news. Remember, this is why short exempt numbers are through the roof. Absolutely skyrocketed, guys. Because in the name of liquidity, the market makers are making more and more synthetics every single day. And you want proof? It's right here. Let me pull that up for you so that you guys can see exactly what we see. As a matter of fact, this is from my guy, Edward Britchuk, hanging out right here with us right now in the think tank, always pulling out amazing data. Look at the short exempt volume every single day. From June 6th at 50,000, June 7th at 83,000, June 8th at 42.9, June 9th, 52,000 short exempt volume, June 10th, 123.7 thousand, June 13th, 264,000 short exempt volume. That means that market makers are selling shorts, are selling shorts, naked shorts on the stock, even when there's no shares left to borrow. The only way this is possible is, as confirmed from Virtue CEO, he calls it the liquidity. We call it the liquidity fairy because they're doing all this in the name of liquidity. They've got an unreal amount of synthetics and naked shorts because they're able to process just yesterday 306,654 naked shorts without shares to borrow that they use to short it. That's 55.7 short percentage on the stock of overall volume, which is absolutely massive. Absolutely huge in case you don't understand what the fuck I'm saying. Well done,
Boss,
Edward.
I shared a real interesting jump in the VIX in ApeChat.
I'll be right there. Look at this. Here's the Ortex data update for AMC as of this morning. We've got 37.86% free float on loan, an increase of 6.2%. 195,180,000 shares on loan, an increase of 6.26% from 7 days ago. We've got a 5.9% change, positive change in days to cover to 3.76 average days to cover on loan. The cost to borrow in the last 7 days has gone up 79% from 6.45 to 11.6. And remember, they had to return 30 million shares in order to get that down and only make that a 79% week over week increase of cost to borrow. That's huge, guys. Utilization is at 100%, and it's been that way for quite a long while, which is exactly why they have to use short exemptions to short the fucking stock. 306,654 yesterday alone, to be exact. Rant over. Point proven, motherfuckers. This is me buying AMC every week and not selling. These meme stocks are my favorite hedge. My SPY puts, my VIX calls, and shorting the bond market, TBT, you name it, I'm all over it. We are having a blast because let's be honest with ourselves, ladies and gentlemen. What is there to look forward to in this economy and in this stock market that leads anyone to believe that it's going to see all-time highs again anytime soon? If you want my honest opinion, we won't see all-time highs on the S&P 500 for at least 5 to 10 years. At least. Probably closer to 10 or more.
I posted the finished product in Ape Chat.
Fantastic, my dude. Check this out. Bitcoin trending back down to 20,600 right now. 20,600 after a massive spike and then just massive red candles following it. We had a low of 20,079 on Bitcoin today. %114% gains on Sidious Space. Bunch of penny stocks, pink sheet bullshit. And then you got AeroClean Technologies, $21 a share, 53% gain still on the day. Comero Life Sciences up 32% still at $3.50 a share. And we'll skip over all the pink sheet garbage that's being abused by market makers. And there's really not much to look at. Algoma Steel, 17% as the price of steel and other materials continues to increase. And all the other top gainers are OTC bullshit. Top percentage losers. Got some holding companies. Pixie, which was up pretty huge yesterday. That's it. Nothing really of note in that sense. Let's look at the indices and see what's actually moving. The actual S&P is up 0.8. The NASDAQ 100 is up 0.88. No, never mind, 0.8 as well. XLF is up. The financial select up 0.6. The energy sector is down 2.25. Utility sector is flat. Materials is down 0.6. Gold and silver is down 1.4%. And iShares US Real Estate ETF is up 1.79%. That's quite comical, but that's cool. Let's see if this FOMC press conference kicks off yet. Not yet. We're still waiting for Jay Powell to see what kind of lies he's going to tell us. Tesla's going crazy right now. What the fuck is the VIX doing? Oh man, I wouldn't be surprised to see it being manipulated to high hell. Redbox is up 10%
Yeah,
still.
it kind of looks just like it's been really manipulated at the moment.
Oh yeah, down 7.5% on a 0.6% pump on the SPY. Absolutely. Absolutely. Can you say naked shorts on the VIX by the plunge team?
Yeah, I'm looking at it and it's very fucking obvious.
Holy shit. Was the VIX halted?
No, it was not.
3, 4.
They're preparing for tomorrow's carnage.
I'm seeing 4 flat candles on the VIX, and 5, and I usually only see that during a volatility halt. The VIX was at 32.58, and then saw 1, 2, 3, 4, 5 1-minute candles. This was actually yesterday afternoon, so never mind. It should be good. There's no halt on it. I just wanted to double check that. What was that, Martin?
Yeah, I'm looking at the VIX now, and it hasn't been halted.
All right, thanks. Excellent. Thanks.
The screenshot I shared in Ape Chat, both of the SPY and the VIX.
Oh, you know what?
Not exactly the same time though.
My chart got changed to UTC on accident. The time zone, which I will have to change back, but it's not a problem for me. Arrow clean still sitting strong. All right. What the hell just happened?
Hey, boss, if I could just jump in for just a minute. Is that cool?
Always, my man.
For the newer investors out there listening, this is a really good piece of education for everybody. What happens in every major economic downturn is it starts with the hedge funds, it moves to the banks, and then the government starts to act. And if you remember back when the government was saying the word we all hate, transitory, and they were speaking that this isn't going to be an issue, we also saw hedge funds like Citadel lower their withdrawal limits to 6.25% per quarter. We see the people who actually run the money understand when these things are going down first. And it's months and months in advance, but this is how you can help predict where these things are coming. When the hedge funds start firing people and stop hiring, and then it moves to the banks and they start tightening, and then they start liquidating positions. When those things start to happen first, then you see the government step in and do things like a 75-point basis hike. The government always acts last. So this is just a good piece of education for the newer investors in the future to keep an eye on for the next time something like this might happen.
Well stated, my friend. It's a great point. We're seeing stable coins and hedge funds. Just another one bites the dust. There's been like 4 or 5 today that we've already noted, that we've already brought up. It's only a matter of time before this continues to bleed into further short hedge funds and causes a full-blown financial crisis. And we are positioned in the best possible way to take advantage of said crisis. Look, this guy sees it on the S&P as well, on the VIX. Look at this guy's Weeble chart also shows it on the VIX, the giant spike. That could very well be the plunge team at work there, because the only way that the VIX is able to move from 30 to 32 in a 1-minute candle and back down would be the plunge team selling naked shorts on the volatility index. And the RSI reflects it, because you can see
Isn't
the
it
RSI
beautiful?
Yeah, you can see the RSI go from extremely overbought to extremely oversold back to extremely overbought again on the pump and dump and subsequent pump immediately after, and then finally cool off.
Yeah, I posted a side-by-side of both the SPY and the VIX lower down.
That, my friends, is further proof that it's not just AMC and GameStop. It's the entire fucking stock market is manipulated to high hell. This is not the first time you've seen the plunge protection team bail out the stock markets with the Economic Stability Fund. That's our taxpayer dollars. You have just witnessed myself and a lot of people in this Discord and probably watching on YouTube get robbed of all of their gains on their SPY puts and their VIX calls at this very minute. We just all got robbed of billions of dollars by the plunge protection team If you're not fucking furious, it's because you don't understand what the fuck's going on. I just got fucking robbed of billions of dollars, and I'm not fucking leaving until I get them. And I will get them. That's why Three Arrows Capital is insolvent and going out of business. That's why Tiger Elegantis or whatever, Tiger Legatus is going insolvent. That's why all of these companies are getting burned. All of these hedge funds are going under. It's only a matter of time. There you go, guys. That guy Astro saw it too. Check out his tweet. He just tweeted about it. The exact same thing that we just saw, that we just talked about, is being picked up by traders all over. Here's the volatility index. Look where it got halted, 3250. And it looks like it's right under the whack-off sniper. The center range, the 21 range here. Absolute great point, my man. Damn it. There we go.
Billions of dollars with an S.
Billions with an S. That's right, my friend. Real quick, Poise now. Thank you for your contribution, my friend. Says, hey, boss, who's going to be the dumb money after Mohas? And Ashraf, thank you as well. He says, boss, just joined. Do you think these bastards will pump and dump the SPY no matter what? Those guys in mainstream media make the narrative to make money. Yes, my friend, I definitely foresee pump and dump and a giant bag holder creation machine here on the stock market. That's what the SPY is right now. It's a giant bag holder creator. And it's up 0.48% at 375 right now. Taking a look at greater markets. Aeroclean still up 45% on the day. The meme stocks, some of the meme stocks are the only real movers. Take a look at the 5-day. Every single day. Take a look at the 1 month. Just bag holder creation machine. Take a look at the 1 year. Starting at the beginning of this year, in January, every single time it meets a new low, it goes back up to reach up and bring more people hope, get them reinvested in the market, take their money, and slowly drown them out. Check out this awesome build. My man, Pickle Snake here, Polka Pickle Snake, is making a Lego spaceship to the fucking moon. That's phenomenal, man. How many days did it take you to build this thing?
3. I made a little video that shows all the power functions too.
That's awesome, man. Thanks. All right, let's see what Paul's got to say here. We'll jump back to this.
The interest rate by 0.75 percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates.
S&P is red. S&P is red now.
The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply. As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change in the Consumer Price Index came in above expectations at 8.6%, and the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food, and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions.
Yeah, no shit.
FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices. The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%.
Yeah, sure. Expectations.
As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer run value.
So much for transitory.
Of course, these projections do not represent a committee plan or decision, and no one knows with any certainty where the economy will be
It's going to be a lot
a year or
worse
more
than
from
that,
now.
I'll tell you that much.
Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can.
Let's buy pump go.
Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways.
Ooh, he said it's not expected
Inflation
to happen
has
this
obviously
often, so the market's gonna
surprised
pump.
to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Howard Schneider with Reuters. Two related questions. Chair Powell, did you feel you boxed yourself in with the language you used at the last press conference on 50 basis point hikes in June and July? And would you please give us as detailed a sense as you can of what role you played in reshaping market expectations so quickly on Monday?
So, as you know, we always aim to provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve, when they understand our objective function, our reaction function.
Yep.
And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual, again, subject to uncertainty in the outlook.
Of course, this is George W. here.
And I think over the course of this year, financial markets have responded and have generally shown that they understand the path we're laying out. Of course, it remains data dependent, and so that's what we generally think about guidance, and that's why we offer it.
3,800
and of
back
course,
on the
when
SPY.
I offered that guidance at the last meeting,
Jay Powell.
I did say that it was subject to the economy performing about in line with expectations. I also said that if the economy performed, if data came in worse than expected, then we would consider moving even more aggressively. So we got the CPI data and also some data on inflation expectations late last week, and we thought for a while, and we thought, well, this is the appropriate thing to do. So then the question is, what do you do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead, and so we did. And that's really how we made the decision.
Thanks for taking our questions. Gina Smilik with the New York Times.
I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today. What did 75 achieve that 50 wouldn't have, and why not just go for a full percentage point at some point?
Sure. So if you take a step back, what we're looking for is compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining monthly inflation readings. That's what we're looking for. And by this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago. So contrary to expectations, inflation again surprised to the upside. Some indicators of inflation expectations have risen, and projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point rate hike, as I mentioned. So what was the point of it really is this. We've been moving rates up expeditiously to more normal levels, and over the course of the 7 months since we pivoted and began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move, is at 1.6%. So again, the committee is moving rates up expeditiously to more normal levels.
That's hilarious.
And we came to the view that we'd like to do a little more front-end loading on that. So I think that the SEP gives you the levels that people think are appropriate at given points in time. This was really about the speed with which you would get there. So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, in that range in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward. Just talking about the SEP for a second, what it really says is that committee participants widely would like to see policy at a modestly restrictive level at the end of this year, and that's 6 months from now, and so much data and so much can happen. So remember how highly uncertain this is. But so that is generally a range of 3 to 3.5%. That's where people are, and that's what they want to see, knowing what they know now and understanding that we need to show resolve, but also be flexible to incoming data as we see it. If things are better, we don't need to do that much. And if they're not, then we either do that much or possibly even more. But in any case, it will be very data dependent. Then you're looking at next year, and what you're seeing is people see a bit more tightening and in a range of maybe 3.5 to 4%. And that's generally what people
the world's
see
about to go to shit.
the appropriate path for getting inflation under control and starting back down and then getting back down to 2%.
No, but see, it did fix
like the right thing to do at this meeting.
S&P with the 0.75.
It ain't fixed
it's
shit.
running.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman.
Well, they're running out of the bear market
in a long
with
time.
just
Monetary policy is in a
0.75.
good place, which is a phrase that you used to use often.
Just pump it up.
Now that the committee is projecting 4% or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market of 4% funds rate next year, do you think that's a level that is going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you.
Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5 to 4%. And how do you think about that? Well, you can think about the longer run neutral rate. You can compare it to that, and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect you're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also
But we
look
ain't
at the
looked
yield
at none
curve
of that.
and
We've
ask
just
all
plucked
along
a
the yield
number
curve,
out,
where is the policy rate?
Exactly.
So for
They
much
think
of the
it's gonna
yield
make a
curve
difference.
now,
It's not.
real rates are positive.
Boss, isn't
That's
it
not
funny
true at
how
the
the
short
crypto
end.
market
At the
is
short,
doing the same crap as the SPY
Of course.
at the same exact time?
Of course it is, my friend. Of course. It makes perfect sense. This is, if the markets believed Jay Powell, they wouldn't be pumping right now. This is the opposite effect of what the Federal Reserve wants to be happening at this very moment. You're not going to get inflation down by pumping the stock market with 75 basis points.
But ultimately, it comes down to, do we think financial conditions are in a place where they're having the desired effect
corrupt, man.
on the
It's
economy?
so
And that desired
crazy,
effect
and
is,
it's
we'd
evident.
like to see, demand moderating. Demand is very hot still in the economy. We'd like to see the labor market getting better in balance between supply and demand. And that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, and those would be, the things, the commodity price issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still, pushing upward on inflation. So that's really how I would think about it.
But this 3.8%, 4% get it done, because it gets the job done and breaking the back of inflation.
I think it's certainly in the range of plausible numbers. I think we'll know when we get there. Really,
Yeah, blaming Putin is like a low-hanging fruit.
You would have positive
Easy
real
to
rates
grasp.
From
I think,
Trump
and
to
inflation
Putin.
coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate is pretty low these days, so I would think it would. But you know what? We're gonna find that out empirically. We're not
And all of a sudden,
going to
one day
be
it will
completely
lose- they
model
will
driven
lose
about
control.
this. We're gonna be
We saw
looking
that
at
every single time they
this,
tried
keeping
going
our
for a
eyes
soft
open and
landing.
reacting to incoming data, both on financial conditions and on what's happening in the economy.
Taiwan.
Thanks. Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data, but I'm wondering on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at we look at a broad range of inflation expectations. So you've got the public, you've got surveys of the public and of experts, and you've also got market-based. And I think if you look across that broad range of data, what you see is that expectations are still in the place, very much in the place, where short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And as you get away from this episode,
what a fucking
you get
cloud!
back down close to 2%.
You see how fast he
And
worded
so
that?
This is
But
really
it comes down
very
sharply
important
in the next
to
couple
us
of years.
that remain the case. And I think if you look for most measures, most of the time, that's
I think
what
he
you
hopes
see.
nobody heard that.
If we even see a couple of indicators that bring that into question, we take that very seriously. We do not take this for granted. We take it very seriously. So the preliminary Michigan reading, it's a preliminary reading. It might be revised nonetheless. It was quite eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the board has moved up after being pretty flat for a long time. So we're watching that, and we're thinking, this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them anchored at 2%. That was one of the reasons. The other was just the CPI reading.
So if you saw a movement like that again, another tick up in inflation expectations, would that put a 75 or even 100 basis point increase in play at your next meeting?
I'll just say we're going to react to the incoming data, and appropriately, I think. So I wouldn't want to put a number on what that might be.
So the bullshit
The main thing is
reason
to
I
get-
just
to
give you
get
for
rates
giving
up.
0.75 basic
and
point
then
hike,
pretty
I
soon
can't
we'll be in an
commit to
area
that being the
where-
same
where
reason
we're-
I'll give you on the next
I
one.
think as you get closer to the end of the year, you're in
know what the
a
fuck he's
range
doing.
where you've got
He's got no
restrictive
fucking
policy,
clue.
which is appropriate.
Wanna be Paul Volcker over
40-year
here.
highs in inflation. We think that policy is going to need to be restrictive, and we don't know how restrictive. So I think that's how we'll take it.
Hi, Chair Powell. Neil Irwin from Axios. Thanks for taking our questions.
The late-breaking kind of decision to go to 75 basis points, do you worry that that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation or if the labor market starts to roll over?
To take the second question first, yes. I mean, I think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question
There
was
goes the
guidance.
market, 378, 90. Let's see what's happening.
Again, the overall exercise is that we try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. It's always a trade-off, because you have to live with that guidance, and so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. With us having really just done very little in the way of raising interest rates, financial conditions have tightened quite significantly through the expectations channel.
Yes,
we made it clear what our plans were. So
microphones.
I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause. Even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point. And we'll react appropriately to that too. But I would like to think though that
couple years.
Our guidance is still credible,
Yeah.
but it's always going to be conditional on what happens. This is an unusual situation to get, some data late during blackout, very close to our meeting. Very unusual to one that would actually change the outcome. So. I've only seen, in my 10 years plus here at the Fed, I've only seen something like that, even close to that, 1 or 2 times. So I don't think it's something that'll come up a great deal.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
Sorry, the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series of declining monthly readings for inflation, and we like to see inflation headed down. So, but and right now our policy rate is well below neutral, right? So, soon enough we'll have our policy rate. Let's assume the world works about like the SEP says. The policy rate will be up where we think it should be, and then the question would be, do you slow down? Does it make you, that you'll be making these judgments about, is it appropriate now to slow down from 50 to 25, let's say, or speed up? So that's the kind of thinking we'll be doing, and we're looking, ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down. And that's what I mean by, that's what it would take for us to say, okay, we think this job is done, because we saw, and frankly, we saw last year, inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that I do think that
he stumbled.
Their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2%.
You just
while
avoided
the
the
labor market
question.
remains strong.
Yeah, the
I
last
think that,
two.
what's becoming more
pain be
clear
avoided.
is that many factors that we don't
Unemployment
control
rise, any avoided.
are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't the monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand in take for example in the labor market. So you have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to a level where people are still getting healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher quantities, not more cars, because they can't make the cars because they don't have the semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest, because of the unusual situation we're in on the supply side. So there's a pathway there. It is not going to be easy, and again, it's our objective, but as I mentioned, it's going to depend to some extent on factors we don't control.
Oops, it's going to depend on factors we don't control, ladies and gentlemen.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
Here we go.
So you're right. In the SEP, we have unemployment going up to the median is 4.1%. There are, of course, a range of actual forecasts, and I would characterize that if you were to get inflation down to, on its way down to 2%, and the unemployment rate went up to 4.1%, that's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50. So the idea that 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome.
Does that include people losing their jobs, or?
We're not, again, we never think too many people are working and fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting the biggest wage increases, as they were before the pandemic, where participation is high, where there's lots of job opportunities, where it's just the labor market we had before the pandemic that's what we want to get back to. And you see disparities between various groups at historic lows. We'd love to get back to that place. But to get there, it's not going to happen with the levels of inflation we have. So we have to restore that, and it really is in service in the medium and longer term of the kind of labor market we want and hope to achieve.
Hi, Chair Powell. Matthew Bosa with Bloomberg. So
As you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate and the SEPs over the next couple of years, and it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that that is still your objective, though, so I'm wondering if you could explain why that line was removed from the statement, and also whether this means the FOMC is trying to induce a recession now to bring inflation down.
We're not trying to induce a recession now. Let's be clear about that. We're trying to achieve 2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that sentence. Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market. And as I mentioned, there are pathways to do it. But those pathways have become much more challenging due to factors that are not under our control. Again, thinking here of the fallout from the war in Ukraine, which has brought a spike in prices of energy, food, fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger and longer lasting than anticipated. So the sentence that we deleted said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. It just didn't, the sentence isn't, it kind of says on its face that monetary policy alone can do this. And that just didn't seem appropriate, so we took the sentence out.
And given the new projections for the unemployment rate, could you talk a little bit about what accounts for such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues get worked out? Thanks.
Well, yeah, I think you've seen, again, we've been expecting progress, and we didn't get that. We got sort of the opposite. So I also think the situation, really since the consequences of the Ukraine war become more and more clear, what you're seeing is the situation getting more difficult. And you look around the world, I mean, lots of countries are looking at inflation of 10%. And it's largely due to commodities prices. But all over the world, you're seeing these effects. And so, and we're seeing them here. Gas prices, all-time highs and things like that. That's not something we can do something about. So that is really, and by the way, headline inflation is important for expectations. The public's expectations, why would they be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future inflation. But headline inflation is what people experience. They don't know what core is. Why would they? They have no reason to. So expectations are very much at risk due to high headline inflation. So it's become, the environment has become more difficult, clearly, in the last 4 or 5 months. And hence the need for the policy actions that we took today, hence our resolution to get rates up and ultimately get them to where we think they need to be in coming months.
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talked about CPI going to 8.6%. The retail sales surprised the market by falling, and then revisions to the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're, of course, watching very, very carefully for that, and looking at the retail sale, the big store numbers and all that kind of thing. And so, but I think the fair summary of what we see is you see continuing shifts in consumption. You see some things sales going down, but overall, spending is very strong. The consumer's in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
So then as you are raising rates in this economy, how closely are you watching consumer spending, or is there another indicator that you're watching more closely?
It would be hard to watch anything much more closely than we watch consumer spending, but we watch everything. You know, we watch business fixed investment, which actually has softened a bit, you know, we're responsible for watching everything. But you know, consumption is 60-some% of the economy, 2/3 of the economy. So naturally, we spend a lot of time on that. And again, there's a lot going on. There are a lot of flows back and forth, but ultimately, it does appear that the U.S. economy is in a strong position and well positioned to deal with higher interest rates.
Thank you, Mr. Chairman. Michael McKee from Bloomberg Radio and Television. Are you targeting headline inflation now or core inflation? In other words, how far would you chase oil prices if they keep going up, if that's going to be the component that drives expectations? Would you risk recession for a headline rate if the core rate is holding steady or starting to go down?
So we're responsible for inflation in the law, and inflation means headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But you know, the current situation is particularly difficult because of what I mentioned about expectations. We can't affect. Really, I mean, the energy prices are set by global commodity prices, and most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too. Also, other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in, and we can't do much about the difference between the elements that make up headline that are not in core.
Could I just, as a follow-up, get a clarification on the SEP? When the members gave their forecasts, when were they inserted into the record? Were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is of one piece. It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that in hand when their SEPs were submitted. So in other words, it's not in addition to what's in the SEP. The SEP, everyone's SEP reflects their thinking about this rate increase and what's going forward.
Hi, Victoria Guida from Politico. I wanted to ask about how you're measuring progress, especially since you've now started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation data itself is a really good indicator, or whether you might be concerned that it's a lagging indicator, or that it might send confusing signals, given that, as you've talked about, there are sort of supply and demand aspects. And I guess my question is, do you think that inflation data will tell you when you've gone to where you need to go, or do you just feel like maybe it's better to overshoot than to undershoot?
So I think the role that we can play, maybe the way to get at it is to say that the role that we can play is around demand, right? So, and we'll be able to see the areas that we can affect are those that are associated with excess demand. And we'll be able to see our effect on, for example, job openings in real time. So, and that would tell us about wages. Wages are not principally responsible for the inflation that we're seeing, but going forward, they would be very important, particularly in the service sector. So, sorry, I'm not sure I'm getting to your question.
My question is inflation data itself the best indicator for when you're getting to where you need to go, or might it lead you to go too far?
There's always a risk of going too far or going not far enough. And it's going to be a very difficult judgment to make, or maybe not. Maybe it'll be really clear. But we're quite mindful of the of the dangers. But I will say the worst mistake we could make would be to fail, which it's not an option. You know, we have to restore price stability. We really do. Because everything, it's the bedrock of the economy. If you don't have price stability, the economy is really not going to work the way it's supposed to. It won't work for people. Their wages will be being eaten up. So we want to get the job done. This inflation happened relatively recently. We don't think that it's affecting expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very likely to be successful in getting inflation
No, we
down
don't.
to 2%.
No, we don't.
And that's critical. It's absolutely key to the whole thing.
Anything
that,
but that.
That we sustain that confidence. So that's how we're thinking about it.
Public bathrooms, maybe.
Too big to fail.
Brian Chung with
They
Yahoo
said they
Finance.
can't fail.
I just want to expand, I guess, on what you just said now about the general public feeling like, you know, you can get this done. When you talk about consumer sentiment being down, household inflation expectations being up, recession just broadly being dinner table talk, does the general feel among American households and also businesses square with your explanation of the economy, given that the description of inflation in the statement didn't change between May and June? Thanks.
So clearly, people don't like inflation a lot, and many people are experiencing it really for the first time.
Yeah, we like
haven't
to eat.
had
We like to put the heating
anything
on
like
in the
this
winter.
kind of inflation.
You know,
in 40
crazy
years,
things
and
like that, Jerome.
It's really something people don't like, and they're experiencing that, and
Don't
that's
like?
showing
That's
up
the
in
way
their,
you're gonna fucking say
in
it?
surveys.
We
and
don't like
in all kinds of
inflation?
ways.
Understatement of
and
the fucking century.
We understand that, and we understand the hardship that people are experiencing from high inflation, and
At least
we're
it's
determined
clear
to
to
do
him
what
that we
can
don't.
to get inflation back down. So that's really what we're
Because he
saying.
understands the hardship, he's foolish.
Clearly,
Shit.
it's an incredibly unpopular thing, and it's very painful for people. So, I guess what I'm saying is the question, the really critical question from the perspective of doing our job, is making
When we
sure
start
that the public does have confidence that we have the tools and we'll use them, and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
No, Jerome. Inflation will go down in time if you do fuck all.
Thank you. Chris Rugaber at Associated Press. You have talked about inflation a few times and mentioned oil prices, China lockdowns. But aside from rises in commodity prices such as gas prices, we're also seeing stickier
Someone should
measures of
hand him a
inflation
dunce cap.
increasing, such as the Cleveland Fed's median and trimmed mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect to, and where do you see those going in the near future?
Yeah. So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. In particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and plane tickets are very expensive. Some of that will be passed through of energy prices, but it's so you're experiencing.
Fucking boo-hoo. What about
services
food?
inflation.
What about gas? Housing,
Shelter
rent?
inflation is high.
Electricity.
So,
Natural
Fucking
gas.
so it's a
Propane.
question, and you see
Heating
the
fuel, heating
Cleveland
oil.
measure going up. Other
Yeah, and I'm worried
many other
about
measures
getting
are
on a
going up.
fucking
So it's a
plane.
time when we're not seeing progress, and we want to see progress, and that's really another part of why we did what we did today, and why the SEP
They want to
looks
see
like it does,
progress.
is that we see it as
What he
appropriate
said, what
to
tools
get
do you have,
the
Bob the
policy
Builder?
rate up to restrictive levels, which would be, in the thinking of the committee, somewhere in the range of 3 to 3.5% by year end, and then after that, you see what the rest of the SEP says. So I hope that's responsive to your question.
Nancy. Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment,
Go on, answer that.
GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you see, you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as 4.1%. That would be, I would call that as meeting that test. Do I still think that we can do that? I do. I think there's. I don't want to be the handicapper here. That is our objective. And I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges.
Possible I can
And again,
fly if I jump off a building, but I'm not going to test that theory.
There's a much bigger chance now that it'll depend on factors that we don't control, which is, fluctuations and spikes in commodity prices could wind up taking that option out of our hands. So we just don't know. But we're focused.
You should fucking know.
Very, very focused on getting inflation back down to 2%, which we think is essential for the benefit of the public and also to put us on a path back to a sustainably strong labor market like the one we had before the pandemic.
Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, I was wondering if you could talk a little bit more. Economists are worried that you're kind of hitting the economy with a sledgehammer and that now there's even more risk of a recession than a 50-50 path of rates. So could you talk a little bit more about that and what evidence would get you to stop rate hikes and maybe even reverse them?
Sure. So, as I mentioned, financial conditions have tightened over the last 7 months.
Shit.
And that's a good thing, we think. But the federal funds rate, even after this increase, is at 1.6%. So it's hard to see how that is too high of a rate. And even if we did another, we're going to get here by the end of the summer somewhere in the 2s probably. Still, that's still a low rate. So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data. As I mentioned a couple times, the committee's views are around a modestly restrictive stance, which would be in the 3 to 3.5% range by the end of this year. But that's conditioned on that being the appropriate thing to do. If we see data going in a different direction, it'll be reflected in our policy, as you see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So,
uncertain at all.
We'll be
it's going to the shitter.
And resolved,
like your
but
career.
Flexible.
Evan Reiser, Market News International. Thank you, Chair Powell. I was wondering if the Fed has initiated a review of the conduct of monetary policy over the last 2 years or so, given the inflation, and will that be shared with the public? And then secondly, given the illiquidity and extraordinary volatility in financial markets, are you concerned that QT will make that worse?
Sorry, what was your question on QT?
Just given the illiquidity and extraordinary volatility in financial markets, whether QT will make things worse.
There we go.
So, of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. It's hard to overstate the extent of interest we have in that question, morning, noon, and night. So, but you have to understand the context. Really the context is this: for decades before the pandemic and the reopening, you had a world where inflation was dominated by disinflationary forces such as declining population or aging demographics, let's call it that, globalization enabled by technology, other factors, low productivity. So, and that's how all the models work. It is decades and decades of data. They look at that. It's a very flat Phillips curve work, and the supply shocks tend to be transient, right? So we have now experienced an extraordinary series of shocks, if you think about it. The pandemic, the response, the reopening, inflation, followed by the war in Ukraine, followed by shutdowns in China, the war in Ukraine potentially having effects for years here. So we're aware that a different set of forces are driving the economy. We have been, obviously, for quite a while, that this is these forces are different. inflation's behaving differently. And in our thinking, it really is
Sounds like
a
he has
question
diarrhea of the mouth.
very strong demand, but you couldn't get this kind of inflation without a change on the supply side, which is there for anybody to see, which is these blockages and shortages and people dropping out of the labor force and things like that. So that's how we're looking at it.
Yeah.
And, you know,
printing
we've done
money.
a lot of work.
Yeah,
internally
all our fault.
on,
We're not buying enough. We're not going to work anymore.
and thinking
Fuck off.
about
Yeah, you
what all
lock
that
the
means.
country
You
down
don't-
and
the
then
thing is,
you
don't
print
know whether those
80% of all
forces
money,
are-
yeah.
Yeah.
To what extent are they going to be sustained? In
Out
other
of the
words,
labor
will we go
force,
back to
my
a
ass.
world where that looks a little more like the old world, or are we really going to be in a world where major supply shocks go on and on? The history is you see these waves of supply shocks, as you did in the 70s, and then they go away, and you know, sort of there's a new normal and things settle down. But honestly, we don't know what that's going to be. In the meantime, we have to find price stability in this new world and maximum employment
He's
in
just
this new
telling you
world where
what
clearly
you want to hear, and then telling you,
inflationary forces
we don't.
are,
Honestly, we don't
you're
know.
seeing them everywhere. Again, if
Yeah.
you look around the world at where inflation levels are, it's
Because
absolutely extraordinary.
they know it's them. It's
It's
their
not just
fault.
here. In fact, we're
without
sort of in the
question.
middle of the pack. Although I think we have a
If you remember back to when,
kind of
if
inflation
you
that
remember
other people
back to when they
have.
spoke to
And,
the rating agencies after
partly because our economy
2008,
is stronger and
all of
more
them
highly
came in
recovered.
one
So
after
that's what
another
we're
and
doing.
said,
We're-
"Oh, it was
we've
just
done a
our
lot of
opinion."
introspection
That's all
and
he's
work on
doing
that.
today.
And,
Well, I was wrong,
sorry,
but it was just
on
my
QT,
opinion.
Hold
Fuck
that thought
off.
just for a
you
minute,
know,
brother.
we've communicated
absolutely
really
right, though.
clearly to the markets about what we're going to do there. Markets seem to be okay with it. We're phasing in. Treasury issuance is down quite a lot from where it's been. So I have no reason to think markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
Thanks. For the last question, we'll go to Mark.
Mr. Chairman, Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market, given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial crisis over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that.
Forced
So,
unemployment.
and that was rates are low, and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously, and so the demand was just suddenly much higher and low. So we
Don't
saw
mention
prices
BlackRock
moving
buying
up
everything.
very, very strongly for the last
No.
couple of years.
He
So that
avoided the
changes now, and
avoided
rates have
that
moved
They
up. We're well aware
artificially
that
created
mortgage
demand.
rates have moved up a
You guys
lot,
hear
and
that?
you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it
Fucking
affect
have a look at the
housing
mortgage rate
prices?
then, you nuthead.
Not really sure. It's, I mean, obviously we're watching that quite carefully. You would think over time, I mean, so there's a tremendous amount of supply in the housing market of unfinished homes. And as those come online, whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place and housing availability and credit availability are at appropriate levels. So thank you very much.
Here's mortgage-backed securities, ladies and gentlemen. Jerome Powell says we do not know how housing will be affected. Well, my friend, mortgage-backed securities are at the lowest they've been, and even lower since 2008. Vanguard mortgage-backed securities ETF is lower than it's been since ever. Ever. Literally. Ever. My friends, Jerome Powell is lying to all of us. And the only real truths he's saying is we don't know. Wolfie, your thoughts?
Oh, fucking how long have I got?
As long as you want.
An hour?
Yeah, I couldn't fit it in that, but I'll keep it short. Full of shit. Absolute full of shit. I get the position. You don't come out on national telly, global telly, and tell the whole world it's about to go to shit. But there comes a time when you have to tell people this isn't something we can control. These factors that I should be talking about, I'm not allowed to. He's never going to do that. So what does he do? What they all do? He'll come out and delay the process of us, supposedly us, understanding the 99%ers, the grafters, the backbone of every country. And he'll come out and he'll say it in such a way that sounds a little bit logical, a little bit feasible, a little bit complicated, all the things that they always use, so we don't dig any further and we just go, oh, Jerome sounds like he knows what he's doing. And then in the background, they're all positioning themselves. They're all coming out of the blue chip stocks. They're all buying into things that are going to shoot up in price when the time's right. So they'll end up richer out of this, and the 99% will end up poorer. That I can guarantee. And I'm not a fucking expert. I'm not paid hundreds of thousands of pounds to tell people this. I'm just an average Joe that's sick of it. So everything I just heard either wasn't answered. Some of them questions I thought were real good questions, but he never answers them. He just does the dance. That's all he did. He just did the dance. That's all he ever fucking does. How can he not know what you've been telling people, boss, for the last 8 months?
Well,
How can he not know that?
Closely. He said they're looking closely, right? How can they not
At
fucking
what?
see it if they're looking so closely? Just like last year in July, right here on this channel, Wolfie, you and I and everybody else was talking about inflation's out of control. And it's hyperinflation before you know it. Here we are, 10, 11 months later, and everything is coming out. These things are playing out because it's obvious to everybody who's in touch. Everybody who's not ridiculously out of touch with the realities around them and the economy understands that inflation is unstoppable right now. And 75 basis points is not going to cut it. They priced it into the market over the last 3 days. We saw that happen. We saw new 52-week lows. And here they are pumping it up for now as high as they can from a low of 372, currently at 382.31. That, my friends, is market manipulation at its best. What do I think is going to happen in the next several days? Well, Evergrande's about to be removed from indices today. About 50 different indices by Sol Active in Germany. And that's happening today. So what do I think is going to happen when China Evergrande Group is removed from the index at a price of 0 on 6/16, June 16th, 2022, market open? Well, my friends, I think that all these Goldman Sachs and emerging markets indices that have Evergrande removed from within are going to see a reduction in collateral value for market makers and hedge funds, likely leading to a bleed off of this bullshit pump that we're seeing right now, thanks to Jerome Powell's fantastic speech. But at the same time, he's not able to answer a question about housing. Meanwhile, the mortgage-backed securities are at the lowest point they've been ever, and credit default swaps are higher than they ever were in 2008. Credit default swaps are the hedge for dropping mortgage-backed securities.
Hey boss, I put a meme in the ape chat to sum up the entire day with Jerome Powell. You're gonna love this, by the way.
Oh, I had Pantheon's meme up just a bit ago. I'm not sure which one you've got up there.
It's the one from Idiocracy. Just scroll up, you'll see it.
have scrolled up pretty
Maybe it's
far.
just me, but I feel like Jerome Powell needs to go play with Legos.
I agree.
I think Jerome Powell needs to wake up to the fact that you've got 90% of all Americans are going to live for a fucking worst time they've ever faced. And he is doing fuck all to correct it. I see a clip. I don't live in America. Why do I care so much about America? Because it's people, good people. The United States of America, the #1 country on the planet, the one that provides assistance and help, support, security. This was what we were brought up believing. Now look at it. Run by fucking hedge funds and banks for their own benefit, their own reward, and fuck everybody else. And I mean everybody. I see a clip on food earlier, a farmer turning around and saying what the truth is. They're paying $8,000 to feed cattle that's going to go out into the shops that appears on your table. How much do you think that's going to cost you? And Jerome Powell's up there talking out of his fucking arse. It's not a day for memes, with all due respect. It's a day for fucking anger. It's a day to be pissed off. How much worse before they start coming out and telling some truth? Gone beyond a joke now. It's getting scary now.
Absolutely. Literally pulled up the Vanguard mortgage-backed securities right now. Goes all the way back to 2009, 2010 when it was created. And it's at 46.77. Had a little bit of a pump today. But in reality, it started dropping off January 3rd, 2022, the first trading day of this year. And hit a 52-week low yesterday before today's market pump. It also hit an all-time low, for those of you that are unaware, from its inception in 2009. Yet we're the ones that are not happy with inflation. I would say that's about right. We're not happy with inflation. And that's an understatement.
You don't hear me praising about inflation when I gotta pay fucking $5 plus for gas.
How much is gas out there by you guys, Martin, Wolfie? In gallons?
10.
£1.74 per litre. I'd imagine someone do the exchange rate, but I'd imagine that's about $11 now.
Yep.
$10, $10.50, something like that. A gallon.
You know what's not mentioned? I'm hearing of trucking companies and many other companies that are using transport are going out of business because the price of gas every week on spending is
100%.
way past
100%.
what they are able to basically tolerate.
They're
They're going by
companies.
many more numbers.
Mm-hmm.
Yeah, it's disgusting, man. And that goes the
Every
shortage
single day.
supply.
Every single day, my friend. Whoops.
Not
It's
only
all
that, but now
planned.
you got police departments that can't even afford to fill up the damn cars.
Yeah.
That's true.
Yes, man.
Police
It's all
departments
planned.
aren't responding to all the calls if they're not an absolute emergency because they've run out of funding, right?
School buses, are they in trouble yet?
Well, yeah, the school buses, that's a big problem too. It's like they all have a plan to just run this country to the ground, man. That's all. That's how I see it. You know, I could be wrong, but that's how I see it. I've seen it since the whole pandemic happened, man. It's their operation.
Most of us don't get to decide. The only people who decide are right at the very top. And they're not going to come out and tell everyone it's game over until it's game over. Because all the while they don't come out and tell you, we carry on as best we can. And they carry on moving themselves and positioning themselves so they become richer when this is all over.
Yeah, the Great Reset, when there is no middle class but poor and rich. Like, that's the interesting thing, you know? When it talks about, like, in the Bible, it doesn't talk about, oh, if you're in the middle. It talks about the rich or poor, you know, the wealthy or the homeless, basically. Like there is no distinction. There's just one or the other. There is no center or gray area in. I think that's what they're doing right now.
It's been like that forever. I know this great. I never looked into it too much. So I say respectfully to you or others that have. This great reset has caught people's imagination. It hasn't caught mine in as much as there's so much to look at. You can't watch and concentrate on everything. I'm focused in on this play. But as far as the great reset, that's been going on since the 60s. The middle class has been shrinking. The lower class has been rising. And those at the very top have been the only ones that have benefited over the last 50, 60 years. So it's not a great reset in its much as there's always been that way. It's just there's less and less between the divides. You're either in one group or another, and that's the haves or the have-nots. That's the ones that will still have it after a crash, and everybody else like us that lose everything normally after a crash. If you're in debt, your car goes, your house goes. Everything you owe goes. The only people who keep the houses are the ones that have paid for it, that own it. They ain't got a mortgage. And they're on their side, not ours.
Yeah, you're right, man. Yeah, you're right, for sure.
I think the Great Reset is just a narrative to explain away what's happened over decades without informing people that it's been happening for decades. And I think there's an awful lot of people who do understand that. They don't need to hear me say it. There's an awful lot of people who know from the 70s the wages haven't kept up with inflation. So we've got two people working. We've talked about that enough times. I don't have to repeat that. But I think there's enough people who know it, but not obviously enough to stop them saying the Great Reset. Because the Great Reset's been going for 50, 60 years, in my opinion.
Yeah, it's just it's just in modern era. That's what it's defined as, is the plan of the elites, basically. But
Yeah.
but in the current, I think what you're getting at, and what kind of brought to my attention was like the moment in the movie Elysium. It talks about the two different classes. You have the rich class and the poor class, but how they're defined, how they're defined is the rich, they're privileged, and the the poor class, they're not. Meaning they have everything under their basically wealth to do whatever they want. Like they could afford chicken if it was $1,000, if it was $100,000, it wouldn't matter to them because they're quadrillionaires. They have all the money supply in the world. They don't care, but they are controlling. Their greed is to have power and control over the poor class. That's why taxes. That's where that's the thing. When they tax people, that's their power. That's their tail.
I mean, the technical term for that is authoritarianism.
Yeah. And the only way they can get away with two worlds, ours and theirs, the only way they can get away with it is if we have enough. Not everything we want, not what we deserve, not even enough to get by, but we have enough. Enough that means I'll get up tomorrow and I'll do it all again. And as long as that level is there, then most people go through life getting up, doing a job they don't like, driving in a car they ain't paid for an house they haven't paid for a mortgage they're hoping won't go up, to be able to pay for their kids to go to as good a school as they possibly can, and get to a pension that they know nowadays, more so than 20 years ago, they might or might not get when they come to retirement. Retirement used to be you get to an age and you were pretty much guaranteed you didn't have to work. Now go and have a look at retirees. Go and have a look at how many people don't. And then look at the standard of living. Retirement, your pension plan, was supposed to keep you in the life that you become accustomed to. It don't anymore. And when inflation goes through the roof and everything costs more and your food goes up, and your gas goes up, and your electric goes up, it is us that feels it. It isn't them. The only reason it's a bugbear to them is because they have to come out and deal with the rest of us because we get angry and we get annoyed and we get loud. It's the only fucking time they ever take any notice. But anyway.
Keep going, man.
Boss, you
You're
still
absolutely
there?
right.
You still there?
I'm just listening. You guys are spitting fire and truth, and I don't want to interrupt. Powell said prices in housing may keep going up for a while, even when rates are going up due to supply constraints. Things that are out of our control. Hyperinflation is not going to stop because of 75 basis points. I hate to fucking say it. Canada credit default swaps are at the highest level they've been since 2009. El Salvador credit default swaps are at all-time highs, as well as Ukraine and Turkey. They went up 825 basis points on the 13th.
What about Sri Lanka and all that?
Oh yeah, they're all in the shitter, man.
Yeah.
Mm-hmm.
The whole world's going to shit, and you've got power on there going, well, we'll keep a good, a close eye on it. Change your fucking glasses.
They're all skyrocketing.
Yeah, nobody wants to talk about the corruption within the Ukraine and the U.S. involved with the current administration, but nobody wants to talk about that. Yet the whole world is feeling the pain from it. Kind of like 08 did, huh? With Iran and Iraq. Yeah.
Well, we all know Bush did 9/11, so.
And that too. That was a major one. That was the biggest cover-up in history.
Sort of look at it from a different, because I can talk about CIA, I can talk about an awful lot of things, and I never do, because it's not warranted, it's not necessary, at least in this play. But I look at that as sort of an outside perspective. Just bear with me, yeah, because I'm not saying it is or it isn't. That's a conversation that would take hours. But how crazy a world is it that we have got belief that the greatest things on the planet are fake, and the worst things on the planet aren't what we're told they are, for the reasons that we're told they are. This pandemic, how many people don't believe, do believe, have seen it, have looked at it, have investigated it? It's all a deliberate ploy. Keep us all confused, keep fear, keep uncertainty, keep doubt, keep control. When you don't know who to blame, you don't know where to point. If you don't know where to point, you just get on with things. You make the best of it. You do the best you can. That's human nature. That's how we survive for the years that we have. They know it. Mm-hmm. We know it. Never going to change in the short term, but it will eventually. And an almighty crash like this, there's going to be questions that we're not going to let go. So, boss, what I was going to say is, for a few days, there's been a story that I'd like to share. And I think today, with all that fucking anger...
I would love that.
And the crap we've just... Yeah, I wouldn't mind sharing it, because for me, it's... I'm going to do the best I can. If it's okay with you, I'll do the best I can reading it out. But it really hits home for so many different reasons. And it's just like all the other stories that have been shared before. They all show, we're real people with real struggles and very real lives. So if it's all right with you, I'd like to read that, if I may.
Yes, please.
Thank you, sir. So you should all know Javier the Great. I hope I pronounced that right. I've even looked it up.
Javier the Great. Javi the Great.
Javier the Great. I did look it up. I even YouTubed it, and there was 4 ways of saying it, but I'll say Javier. So you should all know Javier the Great. Until now, maybe he's just a name on a screen that you've seen. But from today, I hope his name will represent what an ape actually is in every sense of the meaning. For me, this truly is a story that not only represents us all one way or another, but is a story truly inspirational, but is also the epitome of the human spirit. So, Javier the Great, in name and stature, I thank you, my friend, for allowing me to read your story. So, Javier writes, "Hey, my friend, I want to share my story about the fight for my life. So, my whole life, I've been a loving, caring person, a father, a husband, a friend, a guy that never gave up on what he believed in. In 2009, I had an accident that took me out of work temporarily, and I was slowly recovering after having to have a hip surgery. Eventually, I was so happy to be going back to work and be able to support my family again, but then COVID came at its fullest to change my life forever. Shortly after recovering from COVID, I developed a bad cough that then got worse, and shortly after, I started to vomit. This went on for 4 months. I'm sure every one of us remembers hospitals were not taking visits and doctor's appointments were only available by phone. So finally, after 5 months of trying to find a doctor, I got one. So this was about December 2020. On Christmas Eve, I was in a biopsy, having a biopsy, instead of enjoying it with my family. And that was when I found out that I have stage 4 terminal cancer. Carcinoma, a rare lung cancer. I had never smoked in my life, by the way. But here I was, terrified, because I have kids and a lovely, beautiful wife that was pregnant at the time. The first week of January came along and I decided to invest some money in the market for the first time in my life. I was looking for cheap stocks to buy, make quick money and move on. So I actually bought Tesla and AMC. I bought 35,000 shares in AMC and a good amount of Tesla, not knowing at the time that AMC was a supposed squeeze play or having any knowledge of what could happen. February came around and I started intense chemotherapy. I was scared. I was in pain. I had no doubt that I was dying. I was 125 pounds in weight from my original weight of 175 just a few months before. My hair fell off. I couldn't walk. It was bad. My body completely broke down. 1st of March 2021, I was told to start planning for my death with my family. As far as who was going to be in charge of everything when I died. That's when I met a doctor, Dr. Cheryl Zhu. She looked at me and she was crying because she had found out about my pregnant wife and all my kids. She told me this, even if you're on your last days to live, I'm not giving up on you. So she kept going with chemotherapy and also ran over 500 blood tests. She wouldn't give up, I wouldn't give up. Not giving up till one day she called me and said, Javier, I need you to come into my office. I'll always remember she smiled at me when I walked in and I saw her. And she said to me, you've won the lottery twice, all in one day. She said, Javier, one second. She said, Javier, out of less than 2% of people in the world, you carry a rare genome in your blood. Sorry. Less than 2% of people in the world, you carry a rare genome in your blood. And since you carry it, we can control your fight against cancer better. I couldn't believe it, so I said, I carry a rare cancer and I also carry a rare genome in my blood that can kill it. She said, yes. And then she said, you're going to be able to live a bit longer now, Javier. As long as you take care of yourself and you don't stop taking your home medication, you will be okay for your babies. So June came along and that's when I started to hear about short squeeze. Short squeeze this, short squeeze that, and I became interested. Obviously, when fighting everything, I'd just forgotten about having all those shares. So one day on June the 3rd, the run-up, I took a look at my AMC stock and was mind blown on how much money I had. Remember, I had bought in at $1.97 and it had run up to $73. Not only did I not sell a single share, in fact, I actually bought 5,000 more. And then I bought some more and I bought some more. As time went on, I just bought more as I learned more. And as I learned more, I bought more. Then I found Marcel on YouTube and I've been holding tight with my wife and my kids ever since. Buying on the way up and down throughout the whole year. Now I hold over 45,000 shares and my wife holds 1,900 shares as well. This is all for my kids. This is all for our kids. These hedge funds will go down soon and we are going to be so fucking rich, just like Marcel always says. Now I'm being updated on my cancer and my doctor is saying that my imaging and blood work look amazing. That my cancer is actually shrinking.
That's beautiful.
I haven't sold. I haven't sold and I really need the money for a home big enough for my kids. Pam the trader, who everyone should know, knows my struggles. We love Pam. She keeps us motivated no matter what. We need this squeeze more than anything right now, but we wait. Everyone thinks we are crazy for dreaming about the MOAS. But I know it's coming and we are going to be blessed with our tendies. I'm fighting my cancer and hedge funds.
Javier,
I'm fighting my cancer.
Javier
I'm
has.
fighting my cancer and the hedge funds. Go on.
I'll give you a minute. Javier owns 35,000 shares. And then he bought more. And he continues to hold, even though he needs this probably more than any of us. That's inspiring, terrifying, and beautiful all at the same time. God bless Javier. I hope hope you live a long, happy life with you and your family. And with us here as well. This is practically
Amen.
one of my brothers here, you know.
Amen. I'll finish off the last bit, boss.
Take your
Everyone thinks, yeah. Everyone thinks we are crazy for dreaming about the morass. But I know it's coming, and we're going to be blessed with our tendies. I'm fighting my cancer and the hedge funds all at the same time, Wolfie. And winning. I appreciate you and the think tank and Marcel. I don't just hold shares, but I also mod for Boss, Tony Denaro, apologies, Massalorian, Phil for Real, Froggy Styles, Scott Luca, Mike from Owning the Float, YouTube channel, and CS Trades. I'm not leaving. That was Javier's story.
We're not fucking leaving. God bless this man and his family. That's tough.
We ain't leaving either, man. Let's freaking go!
I'm staying right fucking here.
Are you fatigued? I'm not tired.
These hedges are cancer. We're about to take them out. Woo! We're gonna be so rich.
Mainstream media is saying that retail investors are fatigued. Javi doesn't look fatigued. He looks stronger than ever.
Javier doesn't look fatigued.
Exactly. Are you guys tired?
Fuck that.
I can't hear you. Are you fucking tired?
Hell no.
Fuck no.
Hell no.
I didn't think so. What are you doing? Says my buy button is fatigued. Fatigued? Hell no. We're all Javier. Javier ain't tired. Why isn't Powell's jaw tired from all that bullshit? This community is amazing. You guys are something else.
This is what a real family is, man. This is what a real family is.
We are the whale.
He won't say it, Javier, but his story to me. Yeah, I get tired. Yeah, I get pissed off. Yeah, I get angry. Yeah, I get annoyed it's taking so long. I'm no different than you. I thought every second of every minute of every hour the market's open or closed since last March, April, and I was in from January. This would squeeze. It could squeeze any second. But then I look at Javier and the struggle he's going through and the fight he's going through. Being told to go home and talk to your family about who's going to look after things. Let that sink in for a moment. When you're doing the shit job, and we've all got them, I've got it. When it's another day that bypasses, another date that comes and goes, another catalyst that's tightening the noose but hasn't quite hung them. You need to remember everything outside of your own children when you look in their eyes, or your partners, or your wives, your husbands, your friends. When the haters come to you and the knockers come to you and the mainstream media want to tell you you're wrong, forget all of that. Think of Javier. He ain't said this. He's just shared his story. I'm saying this. Remember Javier. Not because he isn't like us, but because he is us. It's the epitome of the human spirit. Whatever it's thrown at it, there's been countless stories, horrific stories in the past. Javier's is one of inspiration, of hope. Put a bounce in your step, make you pump your little chest out that little bit further and hold your head up that little bit higher. Because we got a shit job and we're having to wait. It's tough, I get it. It's another week gone by, I get it. I've got to wait for the Lambo another week, I get it. You listen to that story back and you put yourself in his position. You look at your kids now, or your wife now. You tell me you can't hold, you can't wait, because there ain't none of that in their fucking algo. None of it. Javier, I'm proud to know you. Thank you, sir.
100%. We are retail. We are the whale. And that terrifies, absolutely terrifies these hedge funds and big money and mainstream media. We have 2 minutes left on the day. The SPX is up 1.44%, the NASDAQ 2.79%. On the news of a 75 basis point hike. Tomorrow is a whole nother ball game.
Let's fucking go.
Let's go.
AMC and GameStop are all over the fucking news. Forbes, Fox, you name it. Credit default swaps are at all-time highs. Mortgage-backed securities are at all-time lows. Evergrande is being delisted from around 50 or so German indices today. And effective first thing tomorrow morning, Evergrande will have been removed from said indices and will no longer be valid collateral at a price of $0.00 on June 16th. And by the end of day, June 15th, this will be effective June 16th at market open. Bitcoin is at 21.6 right now. And it's got a lot of room for downward pressure. Looked for it to continue to move downwards along with the price of ETH as more short hedge funds and companies like Celsius try to sell some of their staked ETH. Quant Macro Hedge Fund, ADG, that once ran $3 billion, has closed its doors. BBIG cost to borrow max is up to 395%. Average is 357%. Minimum is 222%. Meme stocks are out of control because of the over-leveraging by these hedge funds. Silver is going to squeeze like you have no fucking idea. And I'm not a financial advisor, and nothing in this video was financial advice of any kind. It's more information and entertainment for you to do your own due diligence. 1,087% of the registered silver that is supposedly used to back COMEX contracts is exceeded. The open interest in silver is equal to 230% of all silver in the COMEX vaults. And 1,087% of that registered silver is supposedly used to back those contracts. There's a 1,172,171 troy ounce shortage on registered and eligible total combined troy ounces here, as well as 155.2 thousand contracts at 5,000 troy ounces apiece. Precious metal suppression is beyond your belief. 97% of precious metal trades occur in dark pools. 97% of precious metal trades occur in dark pools. And the stock market equities have not yet caught up with consumer sentiment. And the reality is that Americans had $4 trillion in the first quarter of last year. And as of this year, that number is $1.1 trillion as of the beginning of this year. And I'm sure it's under $1 trillion in the second quarter. Hedge fund Tiger Legatus is closing its doors. Putin and President Xi Jinping are discussing military technical ties and economic expansion. And President Xi Jinping has formally declared special military procedures in Taiwan to maintain Chinese sovereignty, which is the exact same thing that Russia did. It's only a matter of time before that occurs. And stocks begin to see their true valuations on the stock market, bond market, cryptocurrencies. Stable coins will continue to collapse. Tether will likely price in the delisting of Evergrande and bring the rest of the crypto market along with it. On that note, have a great day. I wish you peace and wealth. We're going to be so fucking rich. Peace out, everybody. Thank you, Wolfie, Javi the Great, everybody in the chat, in YouTube, Rumble, all over the place, Twitter. Thank you for being here with us, especially in the think tank and all our mods. I appreciate everyone for your contributions, your support. Nomega says, UN Agenda 21 explains a lot. Orwell, 1984. They tell you their agenda in Hollywood, like Hunger Games, and they're not human. The elites, the news that don't talk. There's a lot of truth, a lot of things that we've seen that have proven themselves to be much more than just stories. And a lot of things that we've seen in real life, for example, 9/11, that don't fit the narrative. On that note, have a great night, everybody. Have a great rest of your day. I'll see you tomorrow.
Hey, boss, can we fit one more thing in?
Pantheon, by all means. Go ahead.
The proxy votes for AMC are going to be due tonight at midnight Eastern time. And there's been reports that people have been finding as they go back in to check that their proxy votes have been changed for some reason. So we're not telling you how to vote. We're not making recommendations, but we ask, please, or I'm asking, please, go back, double check your proxies, see what your current votes are set for, and just make sure it's set for what you selected. There's reports of that actually changing somehow from what people have originally selected. That locks in tonight at midnight Eastern. Please double check that. Thank you, boss.
Make sure you guys check out Pantheon AMC on YouTube as well. One of my friends here in the think tank. Excellent coverage. And we'll give you a lot more details on some things that we may not have covered on this channel as well. Have a great evening, everybody. Feel free to check your proxy information, your proxy vote info for AMC if you've already voted, just to make sure everything's still the same. Have a great evening. Goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. shit. We're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Listen, I want my fucking money. You're an original, hey, Yellen, cowboy. Give me the fucking money. Get the goddamn money printer out. Great. Bounty letter. We're gonna be so fucking rich. Get the goddamn money printer